Hi, good afternoon, good evening. Welcome, everyone. My name is Mina Mikhail. I'm the current chapter president of the International Marketing Club, and welcome to our April 2024 meeting. You'll note inside the control panel, there is a handout section. You'll be able to see tonight's agenda as well as the introduction presentation that we're going through. So first, we'll just a short description of who we are. The International Model Investment Club is a better investing model club that is open to the public. We were founded in May of 2016, so it's been a few years now. We host monthly meetings on the third Monday of each month, with the exception of December when we meet on the second Monday. This club uses hypothetical money. This allows us to avoid issues with currency exchanges, taxes, and all of the practical ugliness that comes with actually investing. And that also allows us to be international in our membership. We currently have 12 members from across the United States, Canada, as well as in China. And so our club acts primarily as a learning lab. So it allows us to learn and apply the better investing principles and the fundamentals of stock investment. It also teaches us how to use the online stock selection guide and other investment resources and how to operate and manage an investment club. All our meetings are held online, so we are able to service guests and members from across the globe, as you can see by our demographics. I mentioned the control panel on the right-hand side of the screen. You'll be able to see, again, the agenda and the handout in there as well. You'll also be able to see the current club members. To our guests and our visitors, welcome. Thank you for joining us this evening. You will be muted for the first part of the meeting, but please feel free to post questions in that same control panel. You'll see a question subsetting. We do our best to answer the questions in live time or address the comments as they come in. But if we don't address your question fully or your comment fully, there will be a period at the end of the meeting when you'll be unmuted. We'll invite you to give your comments, your feedback, your thoughts, any questions that you want to address. And so, yeah, we look forward to your thoughts and your comments then. Our meeting segments are timed for the sake of keeping to the agenda and allowing us to get all the material in. So you might hear some friendly reminders amongst club members. We'll just move on quickly to the disclaimer. So the information presented this evening is for educational purposes only, and it is not intended as a recommendation to buy or sell any of the securities that are mentioned. The views expressed tonight are those of the participants only and do not necessarily represent those of BetterInvesting or any of the other members. Investors should conduct their own research and analysis before making any investing decisions. Securities discussed may be held by the presenters in their own portfolios. This presentation may contain images of websites, products, or services not endorsed by BetterInvesting or by the presenters themselves. And finally, this meeting is recorded and will be posted to our YouTube channel in the coming days, where you can also find recordings of past meetings for future reference. So, having gone through that disclaimer, we'll go quickly through tonight's agenda, and then I'll hand off the presentation to my friend Reddy, our treasurer. So, starting off, we will receive our monthly treasury report by Reddy. Then Anitra has been kind enough to volunteer an education topic this evening. She will be conducting a Better Investing magazine article summary, so we're looking forward to that. We also then have 2023 annual reports and quarterly reports to discuss this evening. So you'll notice that there's a hold recommendation. We'll see if those still stand because the market changes quickly, and we'll investigate those companies specifically. We'll then have the open mic for guests and visitors to generate their questions or comments, and then we'll move on to club business, where tonight we have a robust agenda in the sense that we need to consider a new executive team, around table discussions about stock ideas, and then working through our regular stock study and education signups. So, having said that, I appreciate your patience and your time this evening. I'll be handing off the screen to my friend Reddy, our treasurer, who will go through his report. I apologize, I have not passed off the screen to you correctly.
Mina, I lost the main screen. How do I get back? Okay.
I just sent you a request. You should have a pop-up on your screen that asks you to take the screen. Yeah.
Okay, I got it. Okay.
That was your treasure.
Yeah, I will present the treasury report for this month. I just made this today. For this month, I deposited $1,200 on behalf of 12 members. And that will reflect in the next slide. According to the last month's motion, we bought a Google about $1,000 worth at 151, and I used the price of as of March 25th. There was some debate about the day which we should buy, and the day we should buy is the day the motion passes. Okay, and thanks to was that Jane um, sold the Frank Mark FCX shares, and we got a good amount of cash. All the shares were sold. As of today, cash balance is almost 16,000. So I hope we can buy something today with the cash sitting there. This is our current picture of the current portfolio heat map. Again, the cash is largest because of last month we sold. The largest ones are Vertex, Meta, Qualys, Google, and Schwab. This is our current cash balance as shown. As a good news, last months we are doing, I know last week or this week we are not doing that great, but as of today, there are only two reds in there. You can see, and many more are positive because of the last 4 months performance. These are the winners and losers. I list here only 10% are more gainers and 10% are more losers. We have only one loser in that range, and most of them are gainers. The next is I quite I'm puzzled. I'm trying to do my own research. The 1 year shows a big negative, and why is that? But long run, it looks good. I think because it's a last year major negative numbers, and that's what reflects in this slide. Next one is just to contrast with the previous one. Previous one is March 31st date, and I plotted since last month the December 31st also, and this looks much better. 1 year based and 3 year based. Our gains look good. Next is this is a portfolio review. Yes, thanks to Joanne, she reminded a couple times. People have mostly updated now. I will point out in the next slide a few that still needs updating. We have not been doing the portfolio PERT critical review for a while. I think we should do, and we should find out why all these pinks and yellows in the next months. This is the portfolio groups. These are the companies that we have. 1, 2, 3, 4, 5, 6. We have about 12 companies. I think that's what our goal is, to have one company for each member. Right now, Vertex, because of its appreciation, has a larger percentage, but if otherwise fairly, we can increase some in low percentage companies today or in future. This is portfolio diversification according to the sector. We have communications and health sector is the largest segment. We can always reduce and buy other areas. These are the industries. Again, internet and biotech are high because of the Vertex Pharmaceuticals. And this is the company size diversification. I started plotting this, the left one, according to the club recommendation, large, small, and mid-size. So we should always shoot for this kind of ratio. But right now we have cash as a large percentage. That's why kind of little distorted. Next one is company size diversification. We have 11 sectors presented in there, and this is the last one. I plotted this use last month and this month just to find out, and I'm curious to find out this difference between these two cost basis versus market value. This is because we did not pay off the previous members, and that's why distortion. But the blue graph is the right one to follow. Any questions?
I
Hello?
don't have any questions, but I am so glad we're looking at this today and not tomorrow, because at least 4 of the stocks that are not in the red on this chart are in the red in reality, because these are Friday's prices. A lot of things have gone down, so but I enjoyed your
I
presentation.
I did, in fact, purposefully. I updated this one, which today's prices. But the BI uses
Right.
the previous day, last
Yeah.
Friday.
Yes, they do.
Okay.
Yeah.
Yeah. Yeah. That I cannot change.
Oh no. But I'm glad that I'm looking at it today. Yeah. Okay. Thank you.
Yeah.
I think you're ready.
Okay.
Mina, are you there?
Sorry about that. Yeah, I just have to take a call. Thanks a lot, Reddy. I appreciate that. Do you want to, since you have the screen, do you also want to present IIPR since we're moving on to the annual reports?
Oh, we have the education topic first.
Mina,
Yes.
Oh, yeah, pardon me. I'm sorry, Anitra. I apologize. We have our education topic for Anitra, so let me hand off the screen there.
Mina, before that, I have just, I think I mentioned one comment. I think one of these days we should do full PERT analysis. I do not know who is the right person to do that, but that's a good.
Yeah, no, it's we can definitely talk about that. Great call. Well, thank you for that report, Harry. It was fantastic. So Anitra, thank you very much for taking on the education topic this week. I'll hand off the screen to you if you're ready.
Anitra, I'll do 10 minutes if that's all right. If that's going to work for you for the timer. Ensure you're self-muted if you're trying to speak.
I am talking away. Okay. Okay.
Okay.
All right. Here is the presentation. Oh no, that's not the way it's supposed to look. Okay, hold on. Let's see.
It looks big enough to me. If that's, I'm not sure
Yeah.
everyone else feels the same way. Looks fine.
Yeah, that's great.
Yeah, it looks fine. You can just talk away, just from the beginning.
Nietzsche, are you talking right now? But we just can't hear you. We can't hear you. I can't hear you at least. At least I can't.
You
Yeah, no, you're
can't hear
muted.
it?
No, I couldn't hear you.
Talking if you were talking. Yeah, I couldn't hear you. Yeah.
No.
Can you
Maybe
hear
if
the
you can-
presentation?
No.
No,
No.
we
We
can't
cannot.
look at your screen.
Okay, hold on. Let's see. Can you
We
see
already
the
missed.
screen?
Yeah, we can see. We just don't hear you.
Oh, okay. Hold on. Let's see. Bear with me. Let's see.
Is this a pre-recorded?
I did. I pre-recorded it so I could have the time right. And I timed
Oh,
it. And I said, okay, this
Oh,
way the
that's all
timing
right.
will be
Yeah,
perfect. That's okay. I can do it also, but I was so excited.
we should
Well,
test it.
that's amazing because we can definitely, whenever we can upload the file to the drive, so we can have your recorded presentation with the meeting minutes for
There you
sure.
go. There you go.
Okay. All right. Let's see. Okay. Can you
Sorry, Anitra, can you try again? We could hear you, but I think you kind of broke off at the end there for me.
You know, she probably could just send us the copy and then we'll upload it and then play that way.
can you hear it at all?
No, we can hear
No,
you. You're
we can't
speaking
hear
though.
the
We can't hear the audio from the presentation.
Yeah. I think on what is this WebEx, or you have to share the audio of your screen as well, which is maybe different than just sharing your screen.
Yeah, that's a great point.
It's that way with Zoom, at least. I don't know about this one, but so
So Anitra, are you able to use the PowerPoint presentation version of your presentation just so that we can still hear your audio?
yeah, just go ahead.
Oh, you're still there? Can you hear me?
Yeah, so we can't hear you I think when you're clicking play on the video, it mutes you on the presentation. So I think if you can, if you have maybe just the slides without the audio, then I think we can
Okay.
hopefully
All
hear
right.
you.
Okay,
Perfect.
here goes. You can hear me now though, right?
Perfect.
Yes.
Yes.
All right. Okay. Well, it's from Better Investing, May 2024 issue, made in the USA. And it's on Wash Sales Are Paying for Club Treasurers by Russell Malley. This tax season again saw a significant number of requests for help concerning wash sales. This article will cover what a wash sale is and how to avoid them. A wash sale is not a single transaction, but involves at least two transactions. A wash sale occurs when a sale is made at a loss and a purchase of the same security is made within 30 days of the sale. The purchase can be made before or after the sale that generates the loss. This is an image of a wash sale 30 days after the sale. Most of the time you hear of the 30 days after being considered a wash. This article has shined light on the 30 days before, therefore 61 days total. And in this image, you can see how it can be affected by a purchase 30 days before and 30 days after the sale that generated a loss. What is so important about a wash sale? When a wash occurs, the loss is not allowed for tax purposes, although some changes must be made to the cost basis of the repurchased shares and their holding period. The amount of the disallowed loss is added to the cost of the newly purchased share. The holding period is changed to the holding period of the shares sold for a loss. This is an example of a statement you may get from your broker, showing you the total cost basement and the cost adjustment, the short-term and long-term transaction and how they're broken out, and total wash sales. An ordinary wash sale for example, would be 100 shares of ABC Corp purchased on June 1st, 2015, are sold for a loss of $500 on November 27, 2023. 2 weeks later, on December 11, 2023, 100 shares of ABC Corp were purchased for $5,000. Since the purchase was made within 30 days of a sale at a loss, this generates a wash sale. The $500 loss is disallowed for tax purposes and cannot be included in losses reported on the Next Club tax return. The amount of the loss is added to the cost basis of the shares purchased December 11, 2023. The next holding period start date of the shares purchased on December 11, 2023 is changed to the start date of the June 1st, 2015 shares. The end result is the owner of the 100 shares of ABC has 100 shares with the cost basis of $5,500 in a holding period that starts at June 1st, 2015. A simple example of a wash sale getting complex. A club sells 100 shares from 2 tax lots of 50 shares each, with the loss on the sale for both tax lots. Within 30 days of the sale, a purchase of the 100 shares is made of the same security. In this case, 50 shares of the 100 shares purchased will have a cost basis and holding period adjusted according to one 50 share tax lot sold at a loss, while the other 50 shares of the repurchase will have its cost basis holding period adjusted according to the other 50 share tax lot sold at a loss. Another complication is the acquisition date used by brokers for shares bought that trigger a wash sale. Brokers generally use an actual date rather than the wash sale adjusted tax acquisition date. Using the first example above, where the replacement shares were purchased on December 11, 2023, but due to the wash sale have a tax acquisition date of June 1st, 2015, a broker will use December 11th, 2023 as the acquisition date on Form 1099 when those shares sold. Because of the wash sale, these shares will always be a long-term transaction no matter when they're sold. If sold in 2023, the 1099 for the 2023 tax year would show these in the long-term gain loss section, but with a purchase date of December 11, 2023. This can be a bit confusing for a treasurer, as the purchase date reported is definitely less than 1 year from the sale date. The information shown would make one think this transaction should be with the short-term transactions. How to avoid wash sales. Stop using automatic dividend reinvestment. Since the buy can be 30 days before or after the sale at a loss, this leaves only about 30 days and a quarter when a sale at a loss can be made, and a reinvested dividend will not trigger a wash sale. Be an investor, not a trader. The more you trade a specific stock, the more you'll likely trigger a wash sale. And use my iClub tools to monitor wash sale triggers. Let's take a look at a few of those tools. Here's the security cost basis report. And in my iClub, this helps to identify possible candidates of wash sales. And it will inform you of the basis of all tax lots in your candidate sale. And this can be used before a sale if you know, before it can be used before a sale to know if a loss will be realized. And the realized gains report, it will show you all the tax lots that had a loss from a completed sale. This can be used to make sure new purchases are made 30 days after 30 days of the sale at a loss. What to do if you have a wash sale? A copy of a 1099 will help determine the exact changes needed. Right now, there's no easier way to account for wash sales in My iClub. You can contact My iClub for support help, though. Edits of relevant transactions can be made to remove the disallowed loss and adjust the cost basis of the replacement shares. The workaround involves multiple changes and it's extra work for the treasurer. Currently, My iClub is prioritizing making wash sales easier to enter due to the increasing occurrence of wash sales. There is no timeline projected when, projected to when direct support will become available. Even when such support becomes available, it is always best to avoid wash sales. And I hope this has shed light on wash sales for you. It has for me. And if you want more information, you can go to the BI Magazine May 2024 issue, page 13, the end.
Thank you, Anitra. You have about a minute and a half for questions. It was great, though. Awesome. Thanks.
Well, thank you.
I have a question. Isla, looks like you have a question.
No, I was just going to say that it was a great report. Thank you, Anitra.
Thanks,
Thank
Anitra.
Thank you.
I have a question. You mentioned that you shouldn't reinvest dividends.
Yeah, that was enlightening for me because I need to do something about my account, my portfolio, because I do that. Yeah.
I do that too. So
Yeah,
that was a.
But Anitra, the dividends are generally a small part of your portfolio stock.
Well, I actually heard this because I listen in on a lot of clubs, and I don't know where I heard it, but and I think Bakul was on that call too. But I heard that reinvested in your portfolio, but not in the same stock, and that so the money goes back in, but it'll go back into your cash for you to reinvest, as opposed to going back into that. Let's say it's Meta, as opposed for it going back into Meta.
Same
because
stock.
it goes, yes.
I
I taught something.
My goodness.
I thought the reinvestment is automatic for some stocks, and that's why you choose it.
Yeah.
Well, but you have the option to not take it, to not reinvest.
Yes.
Yeah, but okay, I'm confused on this wash sale. Normally, you reinvest. You're not selling the stock.
Yeah.
You're not selling at a loss. I'm not sure why. I'm confused as to why this problem would occur so frequently.
You know why I think it might, and this is just speculation. Years ago, you weren't able to buy a portion of a share. You can only buy a full share. But now I guess, I don't know if that has anything to do with it and if that's it, but yeah, I wonder if that's it, that even buying a portion of a share is still, and you buy, and then you go and buy a lot within 30 days of that transaction, or whether it's 30 days before or 30 days after, then I'm assuming that can trigger the wash sale.
Okay, but there has to be a sale. We're normally better investing. You're buying a number of shares and you're probably holding it for at least a year before you sell, right? You're
Maybe.
I mean,
Maybe.
right?
I
Maybe.
don't know. I have a
Well,
question.
I would say that 90% of the time that's the case.
Okay,
I have a question to Anitra.
Okay.
I do not know if some of the traders trade every day, in and out, do they?
That's what, and
Oh,
that's
sure.
what
And
Mr. Valley says. He said that is going to trigger a lot of washes. Yeah.
yeah, and that's I know, but they look for the bottom line. But this rule is probably made considering those people.
Yeah.
Probably. Yeah.
Well, guys, maybe I can say a little thing about it, is that, you know, you're selling the stock for a loss. I mean, you're going to claim it on your taxes as a tax loss,
Right.
meaning you're going to be reimbursed. And then you go buy the same stock within 30 days. So it's not really a loss. You think it's going to gain, right? So, but you buy something similar, but not exactly the same stock.
That's another good point. Even if you buy something in the same family, so let's say you sold Google
Mhm.
and you bought, or Alphabet, and you bought maybe Meta, because I think they are both considered something to do with information and communication services.
Communications, they're both communications.
Right. And you think, okay, well, I'm not going to have a wash, you know, and those could trigger it. So even if it's in the same category, it's such a fine line, you know. I wish we can get more education on it.
I don't think any investment club members trade less than 30 days.
Well, they may
Okay.
not do it in the club, but they may do it in their personal portfolio. So this could be very educational on that level.
Yeah.
Oh, yeah. Okay.
Yeah,
Yep. Yeah.
but I would like to see Anitra's slides through a few number examples. That would be nice.
We have to get going because we only had a minute for questions, but let's, if we have more discussion afterwards, we can continue. But let's
Thank you,
keep John's
Anitra.
schedule.
I
Thank you,
want to say
Anitra.
one thing. This was only one page of information that I made this out of. He
Oh,
just
boy.
gave, yeah, so he didn't have a lot of slides. These slides came from things I found. So it would be nice. Maybe I'll type him, I mean, not type him, write to him and ask him to those questions. I'll see what I could do. Thank
Okay.
you.
Thank you, Anitra.
You can, how do I give the screen back?
You just
Actually, I think I need to, I mean, yeah, let me switch it for you.
Okay.
Oh, thank you. That was a great presentation. So, Reddy, are you prepared? Can I volunteer you for IIPR?
Yeah. I
it'll
don't know
be
what happened the last. Yeah.
15 to 20 minutes per annual report. We want to do that. We kind of flubbed it a little bit last month, but 15, 20 minutes per annual report. We'll time that. So go for it,
Perfect.
Reddy.
Thanks, John.
15 minutes for each report.
The annuals, yeah, the
Questions and
annuals.
discussions,
Oh,
right?
okay.
It's time for.
Plus discussion,
Because you
plus
need to
discussion.
present SSG and all that. Yeah.
Yeah, it may be shorter than that, but okay. I did prepare last month, but then I had some problem with the SSG subscription. It expired just on time when I was about to upload. Okay, here is my presentation I made for the annual report for the December ending 2023. Our current today's purchase price is 99.92. No, our purchase price, but the current today's price is 96, very close. It's hanging around in the same price range that we bought, and the price range for last 1 year is kind of narrow. The reason is that this company is stabilizing, company is focusing, and all the negative news are gone. Because one tenant or two tenants did not pay rent default. It was a big news. Some investor was trying to spread the negative news that all stabilized and the company is stabilized. It is a stable company now. The current P ratio is 10.8, which is way down compared to a few years ago because it's at a stable level. I don't know how to get these. I forgot where to get these, but I put them in yellow, which I need to check later. The growth rate is again stable. Revenue growth is 12%, and free cash flow. Historical five years growth is good. Quarterly is 12.3%, and it's basically a REIT company, as you know, probably aware of. Looks like REIT wants to pay everything that their income shows to the stock owners. Okay. Dividend is that's why dividend is increasing, and they want to pay everything to the shareholders. No mergers. I did not notice. My recommendation currently is hold, because stock is very steady now. All the negative news is gone. Where is my stock? Okay. Here is the SSG. I kept this about same or low based on the analyst projections. You can see that it's a last couple of years it's stable and growing steadily. So I lowered these estimates, and here is my projections. Average high is about estimated 14. You can see this is stabilizing, and the low is I kept around 7, which is close to current, and my ratio is very close to 3 to 1, that is desired. That's why I recommended hold. Okay. I think company is doing good, and they are 100% rented and full, no problems, no issues. I can see and read. My recommendation is to hold. Okay.
Can you show the quarterly data?
Yes. Quarterly, I filled it last month itself. By the way, by the way, this is REIT company. I had to follow AFFR. I will show you my spreadsheet. I go through very intensive details in the spreadsheet, from which I fill up this. Where is my spreadsheet?
Oh, it's not automatically filled out?
No. REIT is something special. Thanks to Haney, he showed me. REIT is completely different. Where is?
Can you scroll that one all the way to the bottom?
Yeah. These are all complete. This EPS is completely different. EPS is not EPS. By regular accounting, EPS is AFFO. Adjusted.
But the earnings per share percentage are creeping down, and sales.
Yes, the companies stabilizing. They are not buying many more properties. They have no negative news. It is completely stabilized. One second. Let me. Where is my spreadsheet? Here it is. Okay. I collect all the data in this spreadsheet. These are the growth curves, and here is here. Sales kind of stabilized. AFFO kind of stabilized. PTP kind of stabilized. Okay.
What's
you have to follow
AFFO?
the adjusted funds from operations. That's a REIT
Oh, okay.
Yeah, REIT is completely different from regular stocks. And if Meena allows me, I can project one of those company reports where they report the REITs.
We made a lot of money on this company. I felt like we lost them. We lost so much.
We did not lose any. We did not lose any yet.
We lost sorry, take it back. Not really losing money per se. We lost the earnings. We lost the gain. We used to make a lot of money on this one.
No, I don't think we lost money. Where is my slide on the?
I think what she's saying is that this stock peaked, I don't know, 2021 or something, and then it really dropped in price. We missed the opportunity to sell at its peak.
That makes sense.
Yeah, thank you.
But I think it might
Ready? I have a question, Ready. Do they only do with medical marijuana facilities? Because I know a lot of states are, maybe not a lot, but some states are legalizing recreational cannabis use.
No, they don't do any business. They buy the property, develop, and rent it to growers.
Oh,
right. Just medical.
It's basically real estate rentals.
Yeah, I know, but I mean, this their little blurb on BetterInvesting says medical cannabis. I don't know if they're expanding into just cannabis, all sorts of cannabis. You know.
Oh,
I don't
just
know
like
if
what
it is
they
medical
like
cannabis.
California, you don't have to be medical to purchase it.
Denver, Colorado's been that way for a while.
My understanding is that these growers can't use a regular bank, so that's why they're going through
yes,
IIPR for the financing. So
the banks.
So it's
banks
like federal.
Bank rules do not allow them to finance to these. That's why these guys have a niche corner where they finance, take our money, finance 100%, buy the property and lease it to the growers.
So they're a commercial real estate investment trust, which is not, I mean, just in general, commercial real estate is not a good place to be right now. But cannabis is, though. So, I mean, cannabis is obviously rising up. So
I'm not sure if that's true.
Well,
I can give you two facts.
There are two things that are happening.
Can I give a comment?
There are a couple
Can I give a comment, Reed? Ready? Can I make a comment? Okay. Do you remember Kimberly Cargill? She was a guest speaker. She gave us presentation about the cannabis because she was one of our guests. I don't know if you remember. That was last summer. She owns 10 cannabis business. She tried to expand. They are not doing well. She loses money every year, substantially, subsequently. And also, I'm looking at a valuation statement for our club portfolio. We are losing money. We are lost 1.6% right now. It's a small money, but I remember when Bernard was around, we made a lot of money on that company. And suddenly just now is going to a different direction.
When you say we made a lot of money, you don't make money until you sell.
Right. Yeah, I'm sorry. The game was looking very nice back then.
Well, REITs, sorry to interrupt. REITs are legally required to give a lot of money in dividends. I'm pretty sure. Is that true, Reddy, or anyone else that knows?
Yeah, that's true. That's true.
Yeah, they're supposed to give a lot of money. They're legally required to give a lot of their money back in dividends. So
the two major advantages IIPR has is, one, their real estate is the highest priced rentals. Okay. Two, the banks are still not coming forward to rent them. And three, it is more and more being licensed in more and more states, legalized. Okay, those are the advantages company has. This is the leading company in realtors area in this business.
So, and what are the major negatives, and why is it Why has it been dropping?
Because year and a half ago, there are some investors who started negative because one tenant defaulted paying rentals.
And it was a big percentage of their portfolio?
No, it's not. It's less than 10%.
Is there another reason? Is there another reason why the price has been dropping?
No, it is stabilized. It's not dropping.
Well, the earnings per share has been dropping for the, you showed us earnings per share, and the sales has been dropping on the quarterly data.
Yes, because the company is stabilized. They are not buying many more properties aggressively. Their goal is to fully rent, develop the property that they bought and fully rent it. Okay, and because they are wondering what is going to happen to the banking regulations. If the banks are allowed to freely loan to these companies, then of course IIPR may fall down.
But they can't do that as long as the federal government does not legalize marijuana, which they will not do. It is a state problem.
But on the other hand, the positive thing is more and more states are legalizing it.
Right, but the states don't have control over what the banks do on that level. You know what I mean? Like the banks are not going to lend the money until the federal government says marijuana is a legal entity.
Yes.
Even though states are controlled by even though banks are controlled by states, they're not going to do it until the federal government says marijuana is a legal entity. And the federal government's not near there.
Yes. But this is the most stabilized, steady, and very calculative company in that business.
Looking at the quarterly data, everything is kind of sliding down over the last 4 quarters.
Yeah, because companies kind of getting matured. Okay, they are not in expansion mode in the beginning. First of all, before 6 years ago, their structure was different. They have completely reorganized as a REIT only 6 years ago.
Oh.
Okay. It was not a REIT before.
So we bought it when it's already a REIT.
Yeah, it's a REIT only for last 5+ years.
Yeah.
We don't. That's excuse me. That's 15 minutes, but we have 5 left if we want to use it. But I think that we want it to be growing fast. Still, it's still a small company according to revenue, and we want it to be still growing. And we don't want it to be stabilizing just yet because it's still got a small amount of revenue if you look at that at the SSG. So
okay, somebody asked me. Okay, this is the graph. Are you still able to see my screen or no?
Yes.
Yes.
Okay, this is the graph. This is the period where it was kind of growing fast, but then the news happened. It's kind of stabilized.
Ready? Ready?
Yeah.
Right. When it was a kind of growing this high graph there, the percentage change on pre-tax profit was very high. It was like 151, 130, 96. Now it's coming down to 6.8. They're not really making a profit on their money.
No.
Profits are disappearing.
The whole thing is converted into REIT, 100% REIT structure only 5 years ago. And 5 years ago, after that, 2-3 years, they acquired a lot of properties, expanded.
Okay.
Yeah.
Okay, show the quarterly results again.
Quarterly results.
Yeah, on your SSG. On your SSG.
That's on the other
SG.
On the other
screen.
Yeah.
Window that's open. It's the window behind the one that's open.
Yeah.
Yeah.
Okay.
So 5 years ago, it would have been what? Wow,
2019.
2018.
Mm-hmm.
Look at the numbers of 234%, and it became a REIT, and it just kind of went down to 6.8%.
Mm-hmm. We bought this since 2020.
So its profits are disappearing.
This is quarterly data. You want me to portray?
No, this is fine.
No,
this
it's
is
fine.
Yeah, the trend
Yeah,
is
quarterly
there.
data is fine. Yeah.
Yeah, the trend's there.
The trend is very bad.
The trend is going down on earnings per share, everything.
Mhm.
Everything.
I think 5 years after 5 years, we are not making money or we lost before we are losing more. Maybe it's time for us to get rid of it.
Since REITs pass through their profits to their shareholders, what happens to the shareholders when you sell? How much of that becomes taxable? How much more of that becomes taxable than, say, a different kind of stock?
Yeah, I'm sure some of you are more familiar with it than me. REITs, by definition, they distribute more than their earnings to the shareholders, because their intent is to distribute their assets to the shareholders.
Okay, about a minute and a half left before we should move on.
But this is
later in
important.
business.
I know.
Question: when you show the graph of, can you show the graph again? It spiked.
Which graph?
2 years ago.
Well, the graph of the previous
of the price
of the price growth, where it spiked in, where G is mentioning that we didn't lose a lot of money, but we could have, if we sold, we could have made a lot of money. So the question is, when we buy a stock, do we put like a, well, of course could we put a, a 10% loss on, in other words, if it's dropped 10% below the peak, so it could trigger an email and say, we need to look at this. Do we want to sell after it's lost maybe X percentage of loss?
That's a really good point, because I think I was asking someone, I heard someone recently say they got an email or they got a notification that their stock dropped by, let's say, 40%. And I'm wondering, how do you get these notifications? So how do you get a notification? Someone mentioned Yahoo Finance, huh?
I didn't follow the question.
Well, usually if you have something set up with a brokerage, they might let you know.
Okay.
But can I just add that we should really be looking at the management, so that if something happens to the stock and it drops like that, that we don't immediately say, should we sell? Because if we look at the management, they should be able to recover.
You can always put the limit order. You can always put the limit order.
I think we need to move on. Did I just hear a buzzer there?
That was me,
the next person. Okay,
yeah, we should probably move on to another annual report. So.
Yeah, let's move on.
Okay, well, I'm happy to present LGI Homes at this point. So I'll just take the screen if there are no objections. Perfect. Okay, so this report was prepared last month, but I think just given our we had quite a packed schedule, I don't think we had a chance to get to it. But essentially, so LGI Homes is a homemaker, developer that's involved in new home constructions in the southeastern and southwestern United States, and they're exploring different markets in the U.S. It is in the consumer cyclical cycle, residential construction, and so the closing price since the day of the report, I mean, essentially has fallen about 10%. I think it's about $96. I think I closed yesterday, last week, so just confirming now. Closing, but essentially, so it has fallen quite a bit, and as Reddy has shown in the report, we are in the red on it quite a bit. So yeah, 96.56 US is where it stands right now, down another 2% today. But essentially, we've been losing on this one, though the fundamentals seem it's a bit of a mixed bag, and that's why I have it as a hold initially, given the price, hoping that if we saw a bounce, then maybe it becomes a sell opportunity. But given that we have a drop, I would like to see kind of the group's opinion on, do we potentially move to buy after we look at the SSG, which also indicates a buy opportunity at the moment. But just going through some of the figures, the 52-week low is $84, so there's still unfortunately room for it to go. But we did purchase near the 52-week high. We purchased at 140. High is about almost 142. PE ratio is currently higher than its 5-year average, so it is, we do have that issue facing us, but consistently, at least we're finding that the company is consistently increasing the number of closings per year, and the average sale price of the home. So I believe this year the average home, in 2023, the average home sale price was $350,000. In 2022 is $348,000. So the incremental increases, even given the headwinds we've been seeing with increasing interest rates and kind of at least potential of a slowing economy, where there was at least forecasting in the beginning part of the year. As you see the balance sheet, it continues to accumulate. Unfortunately, some liabilities and debts look fine. In terms of assets, the company has shed some of their empty plots, so undeveloped lands. There was a sale about 6 months ago, and they had focused more on developmental projects, and so I think that's being seen in the assets as well. Cash flow is negative, given that it's a real estate business in the sense of holdings. We're not, I don't think, expecting much free cash flow with this company. Earnings have been going down. That's unfortunately the case we're seeing, though revenue continues to increase slightly. It is a matter of earnings that are not keeping up, and that's, I think, we can attribute to a lot of the factors that are external to the company rather than management. It is more of a sense of increasing mortgage rates, uncertainty given international conflicts, elections, tightening lending standards are as well something that was cited by the management, and so essentially that's where we come into a bit of a concern. It's where do we see the U.S. real estate market going, because in terms of the structure and the organization, management hasn't changed significantly since we've seen several years of good management. They continue to kind of, unfortunately, we see pre-tax profits and return on equity going down and debt to capital increasing, which is the inverse of what we like to see. But I think that is attributable to a lot more of external factors to this company. Having said that, the external factors are part and parcel of the industry in which they work. So I think we will see a lot of variation based on things outside of their control. What concerned me was, if you can see on my screen here, I'll highlight this. This comes directly from the 10K about factors that may limit the number of homes they sell, the price from which they sell, and limit the revenue or profit going forward. And one of the factors that I bolded was if the interest rates for mortgage loans or home prices continue to rise or stay at similar levels. And so we haven't seen any rate cuts yet, and presumably if there's none announced, based on guidance, it looks like they might face financial difficulty from that. And so projecting forward, it's also a question, I think, of what the group's thoughts are, if there is any indication. I mean, to our U.S. members, who are maybe more attuned to the local headwinds. But if that stays at similar levels, if we stay where we are today, the company was going to face more financial difficulty. So they're essentially banking on some rate reductions or easing in mortgage rules to continue to see increases in profits and earnings. And so that to me was a bit of a cause for concern. Other factors that they cite are the conflict, the Russian-Ukrainian conflict, the conflict in the Middle East, 2024 U.S. presidential elections, other elections, and again, similarly, the interest rates are one of the other major factors. And so here I have a few other figures on the company for the year. So like I mentioned, that the number of sales, so the revenues continue to increase, number of sales increase, the average price of the home continues to increase, but we're seeing the stock drop, in large part due to these external factors and to the fact that they're increasing, their debt servicing is quite high now in terms of the cost of it. So I think that's essentially an overview for the company for 2023. If there's no questions at this point, I'm happy to move to the SSG. So here we have, I think I updated this today, or just to, this is the, pardon me, this is the wrong study. Oh, let me pull it up in the drives there. Oh, shoot, okay. Right, perfect. Yeah, so I mean, it's nice. LG has historically followed that upwards and parallel graph we like to see on the SSG, increasing sales, increasing earnings, profits are increasing, but obviously since 2021 we've seen a pretty steep decline in those growth figures, and so but like I mentioned, the sales number isn't really seeing the same kind of decline that we're seeing in the earnings and the profit. And that's kind of, again, like we mentioned, forecasted to continue until there's changing external circumstances. I left the forecasted sales growth at 9%. I've seen, I believe a lot of the analysts are a little bullish, and I think it's because they're counting on rate cuts. I've seen online estimates and forecasts, and the 12 to 14% sales growth. I believe BetterInvesting had it at 10.9 for a 2-year estimate. So to be ultra conservative, I placed it at 9%, assuming that the headwinds don't disappear. And estimated earnings, again, this was the rest. There were quite generous forecasts in the 20s that I found. That I'm not sure necessarily a justification, but I think it is going to be based on optimistic market conditions moving forward. I picked a much more conservative 15% growth in earnings, and yet would still seem to recover them from this negative path that they've been on for the last 2 years. So I feel, I mean, to me, it seems to be, I think, a conservative but realistic hope for this company. If it increases beyond that, great. Again, of course, subject to everybody's thoughts. Now, this is where I get into a little bit of get some questions, I guess. The SSG comes out as a buy, a strong buy. I think we're at 4.some% to 4.x to 1 ratio. That's using an estimated high P of close to the 5-year average. So I believe I put my 5-year, I use 12.2. The 5-year average is 12.4. and the current P is 11.7. Pardon me, the report was based on last month. So with the drop in price, kind of a little bit more back in average, assuming it goes up a little bit further, but closer to the 5-year average, we have an estimated forecasted high price of $206 per share. And then if I take a 25% or just a, sorry, pardon me, a 20% discount on the current price, we get to around $75 a share for the low price. And so it comes out as a buy. Also, analysts now, given that it is trading at $96 a share.
Mina, it's striking.
Right.
Your low price next 5 years PE is 85. That's I know you're not taking into consideration about your decision, but 85 times 842 is 715 low price. I think that's a typo.
Pardon me?
I think there is a typo there.
He's looking at, but I don't think you're using that price.
No, I used the percentage of the. I didn't use that. No, I haven't used that. The calculation there already. No, I took a discount of the current price. I took a 20% if it were to drop from that. So that's how I estimate at $75 for a low price for the share. Yeah. Okay. And then that's also accounting for because the 52-week low is at 84, and it could be, let's assume it drops a little bit further than that, but happy to adjust that a little bit higher if you think. But the problem also is if I adjust it higher, then it pushes the upside down ratio even higher because it makes it look like we're closer to the bottom of the sale. So it turns it into, so if we change it into, for example, if I change my forecast price to even to 84, which was the 52-year low, not 52-week low, pardon me.
Yeah, I tend to do the same thing. I use the 52-week low price kind of. Yeah.
Yeah, it's still.
What if you cross out the high low PE if you go up? What does that give you?
Okay, yeah. Sorry.
Go up a little bit.
Yep.
So you know how you have a okay, the low PE. So you can cross out the 10, cross out 2.6.
Well, I mean, I'm really hesitant to cross of the last year though, right? Like, is that?
I will cross 10, cross the outliers. Yeah, what does that give you for low PE?
Yeah, but do we want to cross out the most recent information that we have?
My concern, right? Is like that the current state of where we are is that more.
Yeah.
Even if we crossed it out, we're still at 7.5 to 1.
So look, your low PE is a 4.9. Right now you are give 8.42. Oh wait, okay, hold on, sorry, maybe I looked the wrong place.
Mina, have you looked at the current value line report?
Okay, wow, great to hear from you.
Right, if you can mute yourself, sorry, Jane. I haven't had a chance. No, I didn't look at not before this report. I think that before the report I did. I haven't had a chance to look at it again since.
Yeah, because I'm looking at right now, and the sales growth rate is 8.5%.
Right.
For the next 3 to 5 years, and the earning growth rate is 2%. So I think
he went to India and coming back.
So let's reduce this down to 2%. Because I saw estimates like you look Yahoo and Morningstar, they had them in some of them are 24%. I saw, and I was like, that's far too high. But
that's right.
because they have been dropping, their earnings have been dropping since 2022.
Well, the earnings. Sorry, the earnings are correct. The sales, pardon me, you're right. The sales and revenue have been going up, but the earnings have been decreasing for the last 2 years. You're correct.
Yeah, exactly. Yeah. So I think we should be looking at earnings more than anything else.
Okay, so I just adjusted the earnings down to 2% to mirror the value line, and that I think that to me looks a little more correct in terms of the pricing, or sorry, the hold recommendation at least. We get a higher price of 113 and a selected, low price of $84, a 52-week low. I have some reports today are wondering, is the company undervalued now just at $96? Is there an opportunity there to buy? My recommendation is still hold, just given we have so much uncertainty around this company and the external factors that can impact its earning potential.
Yeah.
I wouldn't want to sell though, obviously, because we're very, we're deep in the red at this point. And I think there's definitely room for this company to grow. But I think, yeah, thank you very much, Jane. I think that makes it much more realistic and correct.
Yeah, well,
But I guess the question is, will they grow if the interest rates are not cut?
Right, and then so
That's
their
15
suggestion in
minutes.
their 10K is, it seems to gently suggest no, that if they are at similar levels, that they're going to continue to face some financial.
Yeah, because the most recent report is that the mortgage rates have not dropped yet, even in the anticipation of interest rate cuts. The mortgage rates still haven't gone down at all.
Right.
And
Yeah.
the Fed is signaling that they are probably most likely going to hold the next time they announce anything. So
Yeah.
and well, the other thing is the selling season is now and summer.
Right.
So
you're exactly right. Historically, it's a good time for real estate.
so that's the time when people are out there looking and buying, if they're going to do that. And that would mean that either we should consider, cutting our losses now, or we might have to hang on until after the September 30th report to see if anything got better.
I have a question. Under the quarterly data graph, I like looking at it.
Of course.
But when you click on, how do you use this to determine if it's under? I click on, I'm clicking on trailing 4 quarters and zero growth, and it's definitely, go up.
Okay.
Oh, sorry. Yeah.
And then click on zero growth, and it's up,
Middle.
go up.
Middle.
Up, 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 up.
Up in the middle.
Up in the middle.
It's a button. It's a button.
Oh, okay. There you go. All right. Thank you. Yeah.
And it's definitely below the zero growth line, but when you click on the sales growth and the earnings growth, and then take off the zero, because it looks different if you have everything on. So is that considered
underachieving?
Yes, thank you.
Underachieving, yeah.
Okay.
But part of it is it's not really the company's fault. It's not like they're doing something wrong.
No.
All of those companies that do that are pretty much in the same position.
But if you click on quarterly and you click on sales by itself or earnings by itself, it's above. It's above for sales and the last quarter, September 2023 and December of 2023. And it's above for the earnings for December of 2023. But you had to take off the zero and click the other two next to it.
Oh, you want the other two? And so what? Okay, yeah.
Yeah, so it's trying to come back, but I think with the home market, it's not so much as not necessarily, it is the interest rate, but it's also the rental, the cost of rentals, because everybody that's selling doesn't want to buy, and anything you're gonna, if you're not going to buy, then you definitely don't want to rent. So if you have a property, you just don't want to, you want to hold on to it.
A lot of staying put, yeah.
A lot of older homeowners who have owned their homes for years are not really interested in selling right now, because to buy another home, their mortgage rate would go tremendously high, would double or triple what they were used to paying.
Right.
And it's expensive to buy. I did downsize a few years ago, and I kind of wish I kept my other home because it was larger and it's gone up a lot more than what I purchased. But the point is that the price of what you downsizing to has shot up so much.
Well, the carrying
less than 1 minute. Less than 1 minute to go for 20. I just want to say that I think it's really depends on the Fed and its bottom line. It depends on the Fed, in my opinion.
Right.
So if the inflation was cooling off and it was like we're thinking about loosening whatever they would say in their Fed speak, then I'd be down to buy more because it's cheap. But they're not saying that right now.
It doesn't sound like that.
Right.
I think we need to move on. I think John said we had time. It was time like 5 minutes ago. So we
That was
lost
15 minutes, 5 minutes ago. It's 20 minutes now. So
Okay,
That's
perfect.
my last comment. Can I make a
Thank you.
last comment?
Yeah, of course, Jay, go for it.
Okay, sorry. The competitor DHI does well though. Just something to think about. DHI.
Are they in the same market?
Yeah,
They,
they're a residential home builder also.
No, sorry, in the same like geographic and say like price point?
Yeah.
Because these houses are in more of they're kind of the outside goes, it sounds like kind of the starter home, right? That's what they kind of suggest that they're trying to build, as opposed to, I don't know if maybe the different markets are they.
DHI pretty much covers most markets. They have a lot of entry homes. They have a lot of, step up homes. They have some luxury homes. They have across the different markets there. And
Gotcha.
DHI also has an
Uh,
interest in a company that gets them land. So
Anitra could have advised me this one. I'm trying to sell my house and read a news article. People are just not buying because interest rates doubled
mm-hmm.
and
Mm-hmm.
to upgrade your house by 50% or 25%, they have to pay double or 2.5% their mortgage. So people are not coming forward. I'm stuck in this.
Yeah.
okay, let's go. Let's go.
Sorry, I shared the screen with you because I believe I saw a Meta on the list.
Oh yeah, I just wasn't sure. I thought, I was like, well, maybe this isn't for me. Okay.
Yeah,
Well,
sorry, I shot it over just for now. I wasn't sure if you are presenting. If not, please feel free to, we can hand it off to whoever's on the list. I'm not sure if,
I'm fine.
thank you.
Let's see. Okay. So I'm looking for, well, I can start from here. Where do I start? This is my first time doing this.
Go through your report first, and maybe kind of
Okay.
summarize your thoughts on the
When we're
10K, and we'll go through the numbers, and then after that we can go through the SSG.
Okay, through this. Okay.
Yeah.
Let's see. All right. Well, this is Meta Platforms and formerly Facebook. And I don't know a lot about what it did. Well, only what I see. Okay. The fiscal ended at the end of the year, last year. The closing price, the day I did this, which is not this day, was 505.97, and it's 500 actually as of today. And the 52-week low is 174.82 with a 52-week high of 523.57. Do I have to read all this?
No. It's just more if you could give us, kind of your high level summary of what you found out, maybe after reading the 10K, seeing the numbers. What are your thoughts?
Okay.
And if there's any pertinent numbers you want to point out to us, anything specific, then go for it. But kind of the floor is yours, and how best do you think it goes?
Okay. All right. Well, what I do want to point out, their numbers have increased across the board. They are starting to give a dividend as of, I think it was March 26th. They're giving 50 cents per share per quarter, a total of $2 per share per year. And that's news. They did get rid of, did they get rid of? I think they did. Yes. Well, no, they added on new board members, Hawk E. Tan and John Arnold, effective immediately. And they're introducing their next generation of customer-made chips. I don't know how it's customer-made chips, but designed for AI workloads, enhancing Meta's capabilities and AI. Their new tools they have new tools to combat sextortion and intimate image abuse and scams. So that's important because they're already always in the news about that. They do have.
Ryan, you got some background noise and what's going on with you? Not sure what's happening, but
They do plan to continue to make acquisitions and pursue strategic transactions, but they don't have anything that they purchased within the last year. One thing about Meta that I thought was interesting, at the beginning of their in their 10K and their 10Q, they always say they have a what do you call it? A disclaimer saying that we know this is the promise we're making today. However, things change and we're growing. And so be aware that at any point, whatever we're saying may change. And I thought that's interesting because, they're not making any promises. And I get that because this is new for them. They really are growing. Let's see. So I did get this from the fourth quarter earnings call with Mark Zuckerberg, and they talked about moving forward with the popular and advanced AI services that customers interact with. They do want to start rolling out smart glasses. That seems to be the one thing that they know they want to move on first. They want models that can reason, plan, code, and remember many other cognitive abilities. General intelligence will be the theme, and the first world-class compute infrastructure. And it's funny, I wanted to change this to computer, but that's not what it says. It says compute infrastructure. And anybody in that industry would understand that term, but a layperson would want to make it computer infrastructure, but that's not what he's saying. They're going forward in training and operating future models and will be even more compute intensive. And they expect to invest aggressively on building the most advanced training clusters. Now, from what I understand, the word platform, where it says meta platforms, those are the training clusters, that they're building on. And that I found interesting that they have it in their word, because that's the same thing that NVIDIA is using. NVIDIA is having these platforms. And but Meta has it in their words, in their name. Okay, AI is designing novel data centers and designing their own custom silicone specialized for the workloads. They're still concentrating on their reels, which is something they were concentrating on in 2022 and prior. Let's see, and they remain a major priority and driver of engagement. I'm sorry, I'm moving the mouse. And messaging, particularly business messaging. So I guess they're trying to get more businesses involved, because businesses will stick once they use your product. They're going to stick. They can't switch up on their customers that often. Returning capital to shareholders, as you see below, and that's back to the dividend. And I think this is their first time giving dividends. I thought that was interesting. And they're trying to hold on, I guess, to their investors. But they anticipate a first quarter of 2024 revenue to be in the range of 34.5 to 38 billion. And yes, they intend to pay a cash dividend going forward. Subject to market conditions and approval by the board, but it has been approved. It was approved in February. Okay,
What is a
So
reel? Anita, what is a reel?
a reel is,
A
you know,
short video.
is it?
Oh, okay.
It's a short video,
Okay.
like a TikTok video.
Oh, sure.
Oh, you are a saving person. Thank you. I didn't know what a reel was. But you ready to see the SSG? No? Hello?
Sure.
Yes, we are. Sure. Yes,
All
please.
right. Thank you. Okay. Now, when I first did my SSD previously, someone asked me how I came up with my numbers. So before I go into my SSG, I got this from someone who shared something with me, but it was very long. So I took this and kind of conformed it and made it up so that I could find different companies, write it down, and then average it out. And so that's where I got my numbers from. The top line above the yellow. And then of course I did put, that's where I got from Morningstar, from Value Line, from Zacks. Alpha had nothing as far as earnings per share that I could find, and Yahoo and the company earning per share. And okay, so, all right, here we go. For the SSG, they're at the top of their high price right now. Oh, hold on, I can make this bigger. I had another screen plugged in. I can't move that. All right. I went with 13.8, which you see how I got my numbers by averaging out from different analysts, and 13.8 for the historical sales forecast, and 19.4 for the for the forecast for the earnings per share. If you look at the estimate, the detailed estimates, I think they're going forward. They're not as high as they have, well, they're kind of around the same level of height. Yeah, I think that's fine. Shares outstanding are going down some. They're not raising, so they're not doing a lot of buybacks. Their debt has gone up since 2022, or it's actually gone up a little, but it's not a lot. It's still a manageable debt. And okay, so that's on that page. Okay, when I do I'm getting more comfortable with the high PE and low PE. Generally, I like to look at the 10 years and pretty much to see what the history is. But then I do go back to the 5 years for my final decision. I went with 30, and I went with 30, which would take them to 1,082.6 for the price. Excuse me. And for the low PE, I went with 14. And that 14, I took actually, I just pretty much averaged it with the average low PE, and I just went with 14, which is not at the 80% of the price, but that's where I did what I did. I don't know, maybe I should have done something different there. On the quarterly data, the sales growth they're coming back up. We know that they were low last year, so they're rising back above the, rising back in performance for sales. And for earnings, their earnings follow sales, but in this case, seem like earnings is doing better than even sales. And they're trailing 4 quarters, once again, they're improving and they're doing well. They're doing good. We all know that. When you look at the trailing 4 quarters on percentage change for sales, it is on the way up, and the same for, oh wow, look at this jump from 8.0 to 73.7 for earnings per share. Excuse me. And same thing quarterly. It's improving. So it looks good. It's just not a buy. If you want to look at Bakul's ratios, I did do that. And here they are. Oh, you know what? This was not, wait a minute. Is this? Uh-oh, I didn't put the ticker in. Unless I can't see something improve. When I did it yesterday, it was a 73. I don't know how the number changed. Hello?
Yeah, we're listening.
Oh, okay.
I don't know either without seeing it change.
Yeah, but it was 73. The top number is correct, but the bottom number, oh, I do know why. Oh, here, I tell you, I know why. If I could find it. I did a screenshot of it, but I did so much, and I don't know if I can find that screenshot, but I did this because it changed on, well, maybe it didn't. I don't know, but it's a hold anyway. Is there any other, what else could I have given? I'm sure it's something.
Anitra, I have a question. Is
Okay.
it a hold because your low price is so low?
Let's look and see. And here's the audit. That looks good. And for their ratios, and I'm just learning how to talk about all of this. This is interesting.
That's 15 minutes. We have typically give 5. We do have until 7:05 to guests, but there's only 2 guests tonight.
All right,
so
it's almost, they can pay off any of their debt. They can pay off their all of their debt several times over. But as far as the, if I was to go with, let's say, the 80%, not even the 80, the 75% maybe, I guess it would be a buy.
So why do you think that you think it'll drop again to that low price? Wasn't that when all the tech stocks took a big drop last year?
Yes, you're right. I agree.
So do you think it's, I mean, I don't know, Magnificent Seven, whatever they're called, do they think they're going to?
Okay, let's say it's 350, which is a little bit more conservative, and it's still a buy than the 400, because the 400 is still kind of close to the 500, which is really what it's at today, because it has dropped. But I don't think it's going to drop like that. No, I think they're on to something with the AI and with their platforms, and I think they're paying dividends.
And then
Facebook and Instagram are just cash cows right now, and they're trying to build up this meta thing, this virtual reality thing, and now they're doing AI. Mark Zuckerberg, whether you like him or hate him, is probably a strong CEO. Whether you like him, love him or hate him, he's probably pretty good at being a CEO. So
he knows how to pivot.
Yeah,
he knows how to pivot. He's sort of given up the metaverse thing, and now we're doing AI. So he knows which way.
Anitra,
I'm listening.
For your
last 50.
Hey, let's go Jane first, and then Reddy.
For your high PE and your low PE, if you look at the average, you are taking the average. Is it possible you look at the current year, which is lower than your average, 5-year average? So for example, the high PE is 24. I would take, lower than 24. For the low PE, I would take lower than 8.2.
For the low PE, you would. Well, I initially did with 14.
Wait, what?
I would take 8 at the most.
8?
Yeah. And then for high PE,
that's only the last year. That's not an averaging it out.
No, that's okay. That's a trend. Usually we will go with the trend if possible.
Okay.
For the
That seems way low, Jane.
Pardon me?
The low price seems way low.
Yeah. Well, for the high PE, you were correct.
$119?
No, I'm talking about high PE as well, 24.
Well, I'm just saying low PE. It seems really low.
Well, we don't
have to go with we're getting, okay, so when we use those numbers, we're getting dangerously close to a sell.
No, you're getting a hold. It's not going to be a buy. I was even as a peer reviewer, I was even recommending to sell a portion of it because now it's at a high price, and I think we are getting a bigger position on this. I would suggest to divest a little bit of this at a higher value. I think the highest value for the year is 530. I would suggest that, if it goes up to 530, we should divest a portion of it.
How much do you think?
I can understand selling it if it doesn't have to get in the sell zone. If you feel it's a sale, it's it's a sale.
No, I'm not talking about now. I'm talking about 530.
Yeah, and it's trimming it, not selling all of it.
Yeah, trimming it, not selling it. We are trimming it, and then we are still, looking at upside because we don't want to have it up there and then go down like IIPR.
Okay.
I have a comment.
Or like it did the year before last.
Okay, it's Reddy's turn.
Okay.
Wow,
Fine.
thank you, Joanne. I think I have a comment on the low price. Low price, 119. Last 52 weeks, the lowest is 207. Okay, 119 is too low. On the other hand, the first projection was very high. Okay, I think it's in the 200 to 300 range is a better figure for low end.
That's what I had it at initially, $208, something like that.
Yeah.
Yeah, go ahead and do that. It's still a hold.
Yeah. It was
looks like Jane has she's a very detail oriented, but I think her numbers are very conservative, I think.
Yeah. I was always taught to be more positive, to be conservative when you're doing the stock study, and then to be more positive when you're holding the stock. Yeah, but that's based on you have confidence in the management.
Yeah, but not to be totally not
I have confidence in the management, but then I think we should take some profit off that.
Okay, we could discuss that in a moment, I think, right? We gotta
why don't we
guess.
Well, it was just 5:30 earlier this month, I think, but okay. Thank you.
Thank you, Anitra. Is Mina still here? Yeah, okay. Mina, are you available? If not, we can move on to the guests. And I'm going to unmute Brian. Thank you for coming again. If you would like to make any comments, feel free.
Anitra did two very excellent reports tonight, and I put some comment notes in the chat box about the REITs. And Doug Gerlach, as he's talking to the treasurers toward the end of the year and the beginning of this year about what they're going to put on, in one of his reports, I couldn't find it in time, he talked about REITs and what they do. But my comment is, for a model investment club that uses virtual money, no problem. For a real club that uses real money, big problem. And that comes from a treasurer of one of those investment clubs, former investment club. So anyway, just keep that in mind when you're talking about REITs, but a good discussion about REITs in general. Thank you.
Okay, thank you, Brian. Thanks for coming again. We appreciate you and your feedback. Now, I don't know how to pronounce your name, but Jocelyn, I think. Would you like to make any comments on the meeting? Thank you for coming.
Yes, here. I'm just listening. I'm still learning about all these fundamentals and your stock analysis. But yes, I would comment briefly on the REIT. I know the real estate market, even in Illinois where I am, is really not as good as before. So due to the high interest rates, and also not only that, there's also an issue on the if you on the realtors also. There's a lot of stuff going on in real estate. So I just want to say I think a hold would be better, but I think it should be restudied in the future with the different dynamics we have.
Okay. Thank you for your input. That's great. Yeah, I agree with you as well on real estate right now, at least. So thank you, guests. You can stick around if you want to watch us discuss what we might buy or sell in the next few moments here. So anyone, Joanne, do we have anything we want to discuss about the executives committee for the future? Is that something we do right now?
Oh, hey, John, sorry, I was sorry, I had to just step off for a second, but
oh, sure, no problem, Mina.
yeah, we're still looking for nominations. I mean, I don't know if Joanne or Jay, if you've received any additional nominations. I know we've received some. We are still looking for some positions and some individuals to step up to join the executive committee or the executive team for 2023 to 2024. It's a 1-year commitment and with a possibility of extension. So please, if there's anybody who feels interested or would like to learn more about any of the positions, we can send you the kind of descriptions and connect you with the current title holder, but our position holder. So please feel free to email me just individually, and we can connect on those, and I can gather that information. But we definitely do need a few more nominations to come in.
Okay, great. Thanks, Mina. I want to make a quick announcement that we do need an education topic for next month, 5 to 10 minutes only. I have Piero down in the list, but it's basically, it's still open unless you have something prepared, Piero, that you want to do for sure. In that case, go for it. But if someone would like to just do a quick one, you could do it like what Anitra's done, 2 months in a row with the BI Magazine summary of an article, and that'd be great. And then beyond that, 15 to 30 minutes in June and July. And I thought we could potentially do what Reddy's idea, I think, was to do an intensive study of our portfolio in June or July. And then June, we have a stock study coming up, June and July, most likely. So we'll discuss some of our stock ideas later on, I think, right? But maybe form a study based on that after May. But anyway, I'll just pass at that point, and we could discuss the companies, I think, right? We may want to sell or buy or whatever.
Yeah. Thanks, John. Appreciate it. Yeah, and I think Anitra's concept of having the article summaries, I think those have been fantastic and great when we have a limited time, especially for an education topic. I think it's a really great way to get more informed and keep up with better investing that way. So thank you, Anitra, and yeah, John, thanks. Great idea.
I have one.
Yes, Reddy, please.
I have one suggestion also. The thing is, okay, when we consider buying in new stocks, we are ignoring our watch list originally intended for to keep up to date on what is happening, what are the potential acquisitions we can buy from our watch list if we get prepared for it on a regular basis. That would be nice, because when something is not doing well, we want to sell it, and for example, we have a good amount of cash and we don't know what to buy. So watch list attention. and regular periodical look at them.
I think that's
Brian
something
did
that's
update the watch. Go ahead, John.
I think that's something that would be like a new position, Reddy. So I think we nominated Hanny to be treasurer. Reddy, would you like to be the watch list monitor?
Oh my
And
God, I got into trouble. I know I had to watch Joan very carefully, but
You know what they say when you speak up.
Yeah.
But we do have, I'm going to show you guys, I've been adding these watch list. I mean, not watch list. You know how we have like everybody throws in a stock that they are interested in?
Yeah.
So here's that ready. It's kind of already built into my iClub.
Yeah, I noticed that. That was
That's
there.
nice.
I checked that out today. Yeah, you can see the scene heat now.
No, but Joan,
Yeah.
that's old list. We attended this many long time ago. Okay.
Well, this is, I just
No, it's
added
not.
some of
That's
these.
new.
That's new, Randy. This is new.
Let's see.
Yeah, if you click at the Joan, if you go to the top, there you go, right there. Yeah.
Okay, so yeah, we
Same
did
time.
add some. I
Last
added
month.
part. But yeah, these are all
20.
relatively new, ready.
Right. Percent change since added.
Except for the one from
Copar.
2022.
Copar
Yeah,
was a while ago.
So
I
Joan
know.
fully prepared for the meeting before she put my name on it, huh? Wow.
Okay, well, that's a good, we'll have a discussion. I mean, that's a good idea, Reddy. We'll have to figure out how we want to manage that. If you,
I never heard of some of these. What is STM and FSLR? Okay, First Solar.
Yeah. Well,
ARM is a European company. I don't know, but okay.
They're big with NVIDIA at the moment.
Yeah, but European companies, we don't spend enough time to study their economics and outlook. Okay.
Well, and I think, Reddy, these are more for stock study ideas. I think I don't think anybody has time to be monitoring these on a monthly basis. That would be doing a, report on them monthly. So why don't we reserve these? It's a good idea to always have something on a watch list, but unless somebody's actively doing a watch list monitoring, I think these are just idea generators for the stock studies.
Okay, Joan is the leader and I will be the soldier man for this.
Yeah, I assign it to you.
Great.
Okay.
So will we have a stock study next month?
No, not till June, I don't think. Let me see.
Okay, because we do have a lot of cash.
We do, yeah.
Yeah, we do. We have a lot of
cash. I mean, that dovetails into today. Are there any motions? We talked about a few companies. Are there any motions for buy or sells?
Go back to the list, Mina.
I
go back to the watch list. Yeah.
I didn't prevent. Oh, sorry.
You can't buy any of these without a
We don't have any
study.
SSG.
Sorry, the buyer list, the buyer sell from today's annual reports and quarterly reviews. So we had Meta.
I did not. Sorry.
Or even last month.
Are you guys sure?
Or even last month, you're right. It's just a company that we've recently.
Because that's the annual reports too. From last month was annual reports.
That's true. Yeah, these are just a continuation of last month. So yeah, any company that's been presented the last 2 months, are there any buy or sell motions related to those companies?
No, I think we should do a study before we decide to buy.
Well, I mean, yeah, but we have annual reviews, so we can. I think we've reviewed the SSG. So if there's existing companies in the portfolio where we wanted to add to our position, I think that's something we can vote on.
Because we did not do homework, we had to consider only from the existing stocks.
Yeah, they would only get purchased from existing stocks. Or well, yeah, according to our rules, yeah, we would limit ourselves to existing companies since that's what we've reviewed recently.
I prepared my quarterly report for PAYX. I did not present. I do how much time? 9 minutes. The SSG shows the buy.
Do you want to take a look
I'm
at it,
not
Jay?
sure.
Yeah, let's take a look.
Yeah,
If you
you guys want to take a look?
take a
Okay.
brief look.
All right. Let me share with you very quick. Okay. Thank you. Okay. I'm using Baku's vital sign. I put it in my report. I'm still need to spend some time with Baku to come up with questions. I just took some notes based on his presentation. And I'm using 5321, by the way. Those are just examples. Okay, 5321. So for the cash flow, internal growth, they have increased 24% compared to last year, the same time. Acquisition, yes, they have been acquiring another company last summer as the company's debt went up significantly. They also have repurchased buybacks about 1.5 million shares of a common stock. They pay dividends at almost 13% more than for last year, the same quarter. This is not so good news, was that they don't have a debt reduction, and I have to ask Baku for that. I don't see the line item says repayment of the debt. That does not exist in the cash flow statement. That means that the company did not pay down long-term debt. Baku also showed me how to validate that. They do have a long-term borrowing under net of a debt insurance cost. From the income statement, the selling increased about 3%. They don't have a line item for marketing. This is something I still, basically in my head, I try to figure out if they do a lot of AI and a lot of software, new technology for their human resource management. I don't understand why they don't have an R&D. I'm trying to understand, are they using other companies' technology? That's the only thing I can think of is they may use other people's existing technology. But as in terms of they always claim themselves as a high tech in this industry, but there's no R&D for this company. The goodwill increase, but on the balance sheet increased a little bit under 3%. Intangibles increase about over 9%. Receivable increase almost 25%. Obviously, they don't have any inventories, and then the payables increase about 11%. So point of view is the company has a very healthy balance sheet with 1.7 billion cash with that emailing. Their ROE is just amazing. They have a 47% ROE. So this is the SSG. I decided not to change any forecast. That's the forecast we had when we started doing the SSG in September 2023. So I say the graph still looks good, and pre-tax profit 5 years average about 37. Return ROE is a 40, and the debt that because they started acquiring companies last few years, that it's the news is they have not started paying off the debt, so the debt went up. In terms of value, high PE. Let me see. I did not change to 6.9. Where does that come from? Let me see. IP forecast, high PE 30. Oh, okay, high PE 30. Would you guys like me to? I did not change anything. These are the data. Just was from the first SSG. Only refresh the stock price, refresh the latest quarterly data. That was just the default. 5 years average of 32, so we're taking 30. The PE, let's see, what do we use? 21 average low PE. Okay, average low PE 96.4. 52 weeks is the one low 4. Okay, let's see. 2021 low price 99. Okay, so below than the last 4 or 5 years low average. So that gave us the upside down ratio 3.221. The return will be about just a little bit under 15% using the high PE. Quarterly data. So I've been debating, although we have this company, almost a year, no, not quite, several months. We have a gain, how much? About 8%? I believe we have a gain about 8%, 8.7, 9%.
Jay,
We have a 5%.
I have a question. I'm looking at the graph for last 3 years.
Okay, sorry.
This company price is just about stable around $100 per share.
Stock price? What price?
Yeah, stock price. PAYX.
Oh, I did not compare the stock price.
Yeah, for last 2.5, 3 years, just about steady and not going anywhere.
Stock price 87. Yeah, we bought at September 2023. That's when we bought.
From 2021, it is about same range.
2021 is 140. Yeah, 2021. We bought at 2023. We bought the stock at 2023, September 2023.
Yeah, it's like, for example, 140 to 140, 100 low. Okay, it's not going anywhere.
Does anyone know how much we paid for it when we bought it?
Yeah, I looked up something. I think it was 80. Oh wait, hang on.
I have my slide. PAYX. Okay, I have it.
113.
Because we paid 113.11 cents. Okay, 123 now.
Have they issued an annual report, Jay?
Huh?
Have you done an annual report evaluation?
The annual report won't come out until July.
Okay. Let's see.
Yeah, we can wait.
Yeah.
I wasn't suggest to buy, but I remember this company, the financial ratios was very strong. It was like all 10, you know.
Agreed. And it's a very relatively safe company to invest in, but I think what Randy is saying that the price appreciation potential is not as high as some others.
It was not significant. Yeah.
It's not going anywhere.
It seems like the market in general doesn't value this company that much.
It does not. Actually, even Value Line gives a really solid write-up, but the investors are not very excited about this.
Yeah.
So
their current PE and their average PE is almost the same. Their price, as Reddy brought up, is pretty much the same for the last 2 years. I don't know.
Yep.
You know, when we bought it, it was $113, so that was kind of a bargain.
Yeah.
At the time, you know.
Yeah, at the time.
Yeah. And we made a little money on it, but I don't know.
Anitra pointed out a very good point here. High PE and low PE is just about steady. So steady. I never saw this steadiness before.
Yeah.
30, 30, 33, 37.
Do we have a stock study next month? Do we have
Joan knows,
time for that?
Joan knows it.
No, I
What was
don't.
the question, Jane?
Jane, Joanne, do we have time for stock study next month?
Next month.
No, we have a bunch of quarterly reports. 1, 2,
Oh,
3, 4, 5, 6, 7, 8, 9, 10, 11 quarterly reports.
Right. Everybody is
week.
reporting now. So yeah, everybody's reporting now. So
all right. Then that's fine. We just wait until May then.
Yeah.
Okay.
Okay.
What did we decide about LG, whatever it was?
Next
LG.
month is May.
Oh,
Deteriorate.
LG.
LGIH.
LGIH.
But it's, the
Wow.
fundamentals are deteriorating.
Our position is really low.
After all of that hard work. Yeah.
Oh my God.
Wait,
Oh
I
my
have a
God.
question.
Oh my
For
God.
that company, can we
John,
challenge it?
John, did you put me in July stock study education topic? Oh my God. I need somebody to join with me because I'm not an accounting background.
No.
So, okay, sidetrack for a moment. For that company, what do you think about challenge that company with DHR, just to do a comparison?
What company is that? DHR?
DHI.
DHI. DR Horton.
Oh,
Horton.
DR. Wait a minute. DR Horton is
Is a home builder.
a home builder. And what
Right,
has that to
compared to
do?
LGIH.
Yeah.
Oh,
This is
LGIH. Okay.
Right. Yeah.
probably not a buy right now. It's like near its top.
Mm.
All these real estate companies.
It's okay. We can have cash. Cash is king.
I know.
I think we can wait.
Warren Buffett said. Well, isn't it Bakul says he hasn't bought stock for a while?
Exactly. For 2 years, that's what he said.
Yeah, but doesn't he buy big companies?
And he's been buying for many, many, many years.
Yeah, and he buys bigger companies too.
Portfolio
So
already set up. Yeah.
and then he just holds on to them. So
Hey, Baku's down. Baku's at the meeting. Ask the Baku.
That's the first time I'm hearing. Bakul did not buy any stocks for last 2 years.
Yeah,
Baku,
that's
speak
why.
for yourself.
Oh, for last 6, 7, 8 months, it's booming.
That's correct, Reddy. I haven't bought anything for quite a while.
Hi,
Oh,
Bakul.
Bakul is here.
Hi.
Oh,
I joined
Bakul.
in late. Sorry, guys.
Well,
Hello.
he's
more
smart
useful
man.
thing is
Smart man.
Bakul.
Yes.
Bakul, more useful thing for us. You can educate us the logic behind that decision.
Yeah. So the logic behind that decision is, I started with BetterInvesting, where we were, I don't know if it's a religion or what the heck it is, but we were told like 15% is our marker, right? 15% compounded annual growth is a marker, which means that initially I'd thought that, oh, okay, if that's what I'm targeting for, then my stock should double every 5 years. So then actually that was too high a hurdle. So then people backtracked and said, no, it doesn't have to be the individual stocks, but the entire portfolio target should be 15% compounded annual growth, which means that, so then I said, okay, if that's the case, then if my portfolio has lived more than 5 years, is my portfolio double? And what do you think the answer was?
No.
Exactly.
No,
I didn't make that hurdle, right? So then I backtracked. I said, what the heck am I doing here? So, okay. So what I did was I backtracked with some of my activities I've done in the past, and I noticed that I was selling too soon on companies that were profitable, and so I didn't let profits run. Or sometime I'm quick to buy. I'm too quick to buy rather than waiting for the proper price. So I'm kind of, I guess the economists call it like you have animal spirits, right? Well, I had to tone it down a little bit. Okay, so then I said, so then how do I get to this marker of 15%, right? So here's what I was thinking. I was thinking that if I get good at something or recognizing great companies, the only problem is that the pricing may not be good, because great companies are well known and they have persistence, right? And if they have persistence, then unless there's a short-term glitch or like an entire market is going down, either due to recession, pandemic, war, or whatever the heck it is, that's the time to step in. But the thing is, if you step in at that point, you need to have a significant position. So what does that mean? Well, what I did was I said, anytime I take a new position, it has to be 10% of the portfolio. Okay. Now,
you cannot, Bakal, you cannot start with a smaller than 10%. You have to jump into anything new.
Either your wife is pregnant or she's not pregnant. That's the idea. So in other words, you can't backtrack and say, maybe I started 2% or 1%.
A little bit pregnant, huh? No.
Yeah. So I'm on vacation and a swimming pool. I'll just put my 1 foot in the swimming pool. No, that doesn't work. You get
gotta
your
jump
feet
in
there, buddy. So then what I did was I said, okay, I literally started taking 10% positions. Now, if that's the case, I was forced to wean out my approach that was not working, or my strategy or hypothesis was incorrect. And I started getting rid of all that crap, and I started generating. Okay, so I started in 1986. When I started in 1986, I was fully invested at all times. At most, I would have 1 or 2% cash in the portfolio, right? Which is different from clubs, where they might start having a lot of cash, and then they don't struggle, but they have to say, okay, let's deploy this cash somehow, right? So the spurts of returns come once in a while, maybe a couple times or 3 times a year. So that's how you get your returns. Now, if you have too much cash and you're not fully invested, well, guess what? You're not going to get the return for the year, right? But one could counter argue that if the market's going down and you have cash, and you say, oh man, I got to be smart, man. Cash is not trash anymore, right? So one could counter argue that. Okay, so let's put that aside. So what I started doing is I just started taking 10% positions. So now I got to a point 1 year where I only had 7 stocks. Okay. Now
say that again.
I only had 7 stocks.
Oh my God.
Okay.
So if someone in BI or some crazy nutcase like a professional manager would be looking at my portfolio, they probably thought I was nuts, right? I think I am a little. But then I looked at my returns. I said, okay, I've met my goal of doubling the portfolio. So how did that happen? Well, I left. As long as the fundamentals are good of a company, and if the stock kind of takes off or is done well, better than 15%, I let it ride. Right. But if I have said, okay, I'm not a club, right? I'm just, I don't belong to a club, so I manage my own portfolio. So I don't have a bylaw that says if a position is more than X%, then I got to shave it off and, do something else. So I'm not bound to that kind of stuff. So I let the profits run on companies where they were doing good and the fundamentals were kind of chugging along. And then for things that did not work out, I did not immediately sell. I earmarked it for cash, right? Okay, so then when an opportunity comes, like a replacement or a new position, I don't have to dilly, nelly, all that stupid stuff to say, where do I get the cash from? Because I'm fully invested. But I've earmarked things for cash to generate 10% of the portfolio. So I take action. And what action do I take? Either I'm shaving off things, or I'm completely exiting a position. So therefore, I come up with 10% of the portfolio and then take the new position, right? So over time, I know like a lot of clubs, or I don't know if it's somewhere in the writing where it says, you got to do weeding and feeding of your portfolio, right? Get rid of the weeds and, hold on to the flowers or whatever. It's really easy to say that, but it's difficult to implement. All right.
Wow.
Yeah. So okay. So now fast forward after that 7, what happened? I had a total of 12 decisions I made. 2 of them were completely wrong and they were doozies. And so, and out of those, the rest was okay. So now I have 10 positions. Okay. and one of like two, like three of my position constitutes 60% of my entire portfolio, just because they just ran up and the fundamentals were doing good and they kept on chugging along, and I just didn't touch them, let them ride.
And they're still chugging?
They're still chugging, man, believe it or not. So the point is,
Okay.
now you can't do that kind of stuff in a club, because a club has bylaws, they have certain guardrails, right? And it's part of
Right.
learning process. But so you can do that on your own portfolio if you're daring like me, but but the
No,
thing is, you have to tolerate the volatility along the way for a strategy like that.
yeah, but Buckle, you have to diversify and all those theories. There are a lot
Yeah.
of economics theories, more than I can ever imagine.
No, you don't need a lot of economics. So what the Warren Buffett says, or Charlie Munger, who passed away, he would say diversification is the price of ignorance. Let me
Ooh.
restate that.
Ooh.
Diversification is a price of ignorance. So over time, when you learn and you get better at something, you're going to start developing the confidence to take better positions or stronger positions. And as you won't be perfect in anything, neither am I. But the whole point is, you kind of, you have a feedback loop to yourself on your past decisions. Say, okay, if that didn't work out, I'm not going to do that again, assuming it's under your control. Or sometimes you have a position where you can't avoid it because maybe the management turns out flaky, or maybe you wound up in the wrong industry for some reason or stuff like that. So the things that you do have control over, it's something you can kind of polish up along the way, right? That's what gets you confidence over time. So what I typically do, I came in when you guys were talking about watch lists. So here's what I do. I have 3 portfolios. I have my actual portfolio with real money. The watch list, I treat it as though I own it. So I update the quarterlies and stuff, because you never know if something hits a good price that I'm going to take action from the watch list to purchase, right? So it can't just be lying dormant. And the third is an anti-portfolio. What the heck is that?
What is that?
Anti-portfolio. So anti-portfolio is if I've exited a position completely, I take that and put it in the anti-portfolio, and I manage it as though I own it, like one share or whatever. And the reason why, over time, I can tell if that decision was good or bad or neutral. Right? Have you ever sold something? Have you ever sold something and you think,
Okay.
gosh, that thing did better than the next
Yeah.
thing I
It
bought?
went up
Right?
after I sold it. Yeah.
So that's the reason. It's like it's rubbing my nose in my errors, if you will. So,
Mm-hmm.
so that's why I keep 3 portfolios. One is a real one with real money. The other 2 is like watch list and anti-portfolio for things I've exited completely.
What does NT stand for?
It means it's the opposite of not having something, right? Which is you have something in your portfolio. Anti-portfolio is something you exit and put it in there. It's a different bucket.
Things I used to own.
That's correct. So that's how I've approached the thing. And then the time when my investment, my portfolio reached double was back in 2010. And from that point on, basically, you gotta remember, you age along the way, right? You don't. So at that time I was around 50, and then what happened was, now I'm in capital preservation mode. In other words, even though growth is consideration, capital preservation means you should avoid losing money as best you can. And so because the portfolio is relatively, not necessarily dormant, but there's not a lot of activity of transactions, the portfolio could be 5% going in either direction of its double, right? So if the market's down or going crazy, it might be like 5% down, any given time over a period of months. Or if the market's taken off, it will be 5% above the double. And I just let it. I don't bother with that kind of volatility. That's immaterial.
Yeah.
Yeah, but Buckle, it's very interesting how you started, but you narrowed down to 7. How do you
Yes.
know those seven are the perfect ones out of some 5,000 stocks?
Yeah, nothing's perfect ready. So everything has a glitch of some sort, right? And that's where the thing is, if a strategy is working for a portfolio based on fundamentals, and the stock price follow the cash generation of the business, then just hang on to it. That's it. And you'll have some
So
good years and good quarters. You might have some bad quarters, and if you believe that the management or the industry will turn as a result of the company's fundamentals, then you just hang on to it and you ride it. That's the idea.
But what about Apple? Because right now, a lot of people believe in Apple, and yet Apple's, for the first time, they said today, it's not the top selling phone. And I still think it's a really solid company. I'm an Apple user. I got Apple all over my desk. But when you follow a company like that, I still would say stick with it. But what do you think?
Well, you got to remember, Apple is a big seller in the U.S., but if you look at the entire world market, Apple doesn't have a very good footprint. That doesn't mean it's bad. It's an excellent company, right? The Android is a larger footprint, right? But in the case of Apple, it's got plenty of cash, it's got great earnings, it's got great everything. So you might have some market participants indicating that, oh, it's losing its mojo. Well, guess what? It's still got a lot of gas, right? The company is still moving, chugging along pretty good.
Buckle, on that, just continuation, isn't it China's blockade is hurting Apple and Tesla?
Also, what's blockade?
China is trying to avoid Tesla and Apple sales there.
Okay. China telling their people that they can't use Apple products, they can't use Apple chips, they can't. They
And
need to use
Tesla also with their local competition.
Yeah, so you got to remember, China is a different animal. They are a totalitarian government with no rule of law, which means that if you operate Meta or any website or any media company, the way it operates in the U.S., the government won't allow that products and those services to be operated the way it's operated in other countries outside of China, because the government wants to control everything, right? So therefore, that's a different proposition. I know, like Baba, who's the CEO of Alibaba?
Jack Ma, no
Jack Ma?
longer.
Yeah, he wound up missing. He wound up missing for 3 months, right? 4 months.
Jack Ma, yeah.
Jack Ma. So what the heck happened there, right? It seems like
he's missing more than 3 months. Probably more than a year now.
So why did that happen, Reddy? What do you think that the issue or challenge, or what could we speculate on that?
I think China wanted to control expansion of the company, and they shut him up for a while, and he was quiet because he doesn't want to get into any more trouble.
Right. So
no,
the whole idea.
He made a comment that offended the government.
Yes. So that's why I said China doesn't have rule of law like how you have rule of law in this country. They don't have Bill of Rights. So
I totally agree.
If you think you own shares in China, you really don't. The government owns all the assets and properties, so they can confiscate it anytime. Or if you misbehave, they can slap you on your hand, and you could be like out of the scene for a while, like Jack Ma, whoever. But my point is, it works in a different. That government works differently, right? I'm not saying it's bad or anything, but they just operate differently.
Just different.
Yeah, I was kind of worried about Jack Ma, but somehow he managed to keep quiet.
Yeah. So I mean, the governments that operate different, which is different from how we operate here. And so here you have, you have U.S. GAAP, and the way if financials are reported is required by law to hopefully there's transparency. You get bad actors, but you don't have a lot of bad actors. But at least there's some method to the madness in this country as far as reporting and governance and those kind of things. It's not perfect, but the point is it works, right?
It's not a free market there. It's a more government controlled.
Yes. So therefore they operate different. This is the thing I've been asked a lot of times by people. And I tell them, look, I'm just going to tell you, I have a major bias. My bias is I'm a home country boy, and all the stuff I own is U.S. based.
There you
And
go.
if the, you know, and I can't avoid it, by the way, because I have companies in the portfolio that are multinationals. In other words, they could get revenue from China, right? But if I would choose a stock directly from China, like Alibaba or Tencent or stuff, I can't do it, because you know what? I'm not smart enough to figure out like their financials. You know, I mean, not only in China but in other countries, you know, there are three sets of books, right? One sitting in their mind, one is for the government, and one for the mistress. Well, guess what? I can't operate that way.
Oof.
Right? So
What is the first one?
one is in your mind, right? The actual real business. The
Yeah.
second is for government, and the third is for the mistress. Now, guess
Oh,
what?
God.
I can't operate that way. Come on.
Yeah, yeah. That's asking a
That's a,
lot.
that's a,
It's asking a lot, yeah. So then you don't know the true value of the company, right?
I learned new economic theory today.
So you don't need all the economics. All I'm
Yep,
saying is,
yep.
all I'm saying is, you know, and the thing is, if a company is tradable in the U.S., then they trade it as an ADR, right? So it's
Right.
called
Yeah, yeah.
American Depository Receipt. It's an ADR, which means that they have to comply with the reporting like US based. They won't call an annual report 10K, they'll call it a 20F. Okay, so the numbers are just different, but the point is they are required to report it. It may not be that frequent, but the point is they have to report it. At least you get that much. If you know, if you, let's say you have Novo Nordisk or something in Europe, you know, not necessarily in China, but generally speaking, if you have an ADR, then the numbers of those financials are different, like 6K and 20F and I don't know whatever
Yeah.
else. But at least you get to see it. Now, suppose you have a company that's not trading in the U.S. at all or any of the exchanges, and you want to set foot in buying something in China or some of those other places. How much confidence would you have in their reporting, right? That would be questionable in my mind. So therefore, I don't want to play those games, and I just tell people, look, I have a home country bias. Okay, I live here, and guess what? I'm familiar with with stuff over here, and that's it.
I have a question
Yeah.
for you, Bakul. What do you think about the wash sale and the reinvestment of dividends
Wash
into the
sales has been
same
around
stock?
for a long time. Is there any specific question about wash
Well,
sales?
yes, I did an education segment on wash sales that oh gosh, what's his name? Malley did, and in the May edition of the magazine.
Right.
And the question came up. He said in there he doesn't recommend you reinvesting your dividends into that stock because it could cause a wash sale.
Oh, that's because if you sell within those 30 days of like if you buy it back, let's say you sell something and buy it back within those 30 days, then you have a wash sale kind of situation. So if you have a tax loss or tax profit, it's not counted basically, right? So I don't wind up in those issues because for every dividend payer I have, I just reinvest it in the same company. It's like your dollar cost averaging on a quarterly basis, right? But I rarely kind of sell those. Now, suppose you wind up selling because you have another opportunity, but you want to you want to have exposure in the same industry, then you can buy a competitor of the company that you just kind of you know, dealing with because you want to avoid a wash sale. And you know, those are nitty gritty things that I don't care about. You know, I really don't wind up doing it. And a large part of my portfolio now is all in retirement accounts. I just have one taxable account that's, you know, that's not a retirement account. So, you know, I don't wind up dealing with all those nitty gritty accounting stuff. What was the other questions other than the wash sale?
Oh,
It was really, oh, I'm
oh,
sorry. Go ahead.
Bakul, you mentioned an interesting thing. How did you manage to put almost everything into retirement accounts, not the regular savings accounts?
Yeah, so like for example, in the early years, I know some people may have a longer exposure than me, but in the early year when I started investing in IRAs and 401ks, the maximum contributions were very low in those days, so like 1,250. Then it got COLA adjusted over the year. Then became 2,000, then 3, then 4, then 5, then whatever the heck it is nowadays, 6 or whatever. And then when you hit 50, now you got catch up. Also, it allows you to give catch up contribution to catch up, right? And then your 401k maximum also increased over time. And so what happened is I never got to the max until 15 years in the industry, and then I maxed out all my accounts. I maxed out my 401k, maxed out my Roths and so forth. And then when those grew, they just kind of grew faster than a taxable account. So I had all that kind of stuff. Yeah, the other thing you got to remember is, other than retirement funding, if you have kids, you also want to earmark some money separately, if not separately, but somehow, somewhere, for education, right? Education funding.
Yeah, 503 or something.
No, those didn't exist. Those special accounts didn't exist when my son was born. He was born in '94, so I just had a separate brokerage account earmarked for education. And by the time, by the time the new education programs came in, it was very restrictive initially. Because suppose money was left in there and you couldn't get to it, or you couldn't transfer it for somebody else to be educated in the family. Those kind of features did not exist initially. So I thought it was a loser deal, even though it was tax advantaged. But later on, they included all those things. And by that time, my portfolio grew pretty much. And so what I did was I said, okay, I'm just going to leave it as a taxable account and just let it ride.
Yeah, my first 10, 15 years, there is nothing IRA. The IRA even term was not there. 401k was not there.
Right. Yeah. So you got to start somewhere, right?
Yeah.
I did the Florida prepaid college program for my daughter, but I agree with you. People used to really try to sell you on the educational whatever it is, 501 or 503, and I kept telling them, if they were saying if you don't use it, you can give it to somebody. I'm an only child. My daughter's an only child. Who are gonna give it to? And so, I'm gonna give it to the cousins? No.
It's called the 429 plan.
You can give it to the cousins if you want.
Yeah. So well, you can play banker to them to say, look, I will loan you money.
You do this. Yeah.
I loan you money, 20,000 or whatever it is. But when you graduate, I need it back from your from your future income.
Oh Lord! Oh my goodness!
So,
my goodness!
And
so
just
play
set
bank.
up a
You can
payment
play
plan.
bank with them.
Yeah, you can set up a payment plan with them, right? On the future income, because look, they're going to graduate. They're taking a bet on themselves to graduate and get a degree. So, I mean, the income will be stable, one would hope.
As long as they don't do art history.
Well, as long as they don't do stupid stuff and their life is stable.
As long as they live, accidents happen, things happen,
Yes. Yeah. So I mean, the 529 plans came out much later, and then they became flexible much more later. By that time, I had a pretty large account in the education department. So, and then when my son went to San Francisco State University, I just paid everything cash. I said, forget looking at the financial aid and all this. We're not going to qualify anything. I just said, just let it go. I'll just pay the bills, and that was the end of it. The only problem over there in San Francisco is the apartments at the time was $3,000 a month. Right?
Whoa.
So the rents for apartments were $3,000. So I told my son, look, you can't live by own. You're going to get 2 more roommates and pitch in the rent. So he got 2 more roommates, and then each roommate was paying $1,000 a month rent. So that somehow you have to kind of figure that out, right? So that's where the tough part is, right? 2 areas: education for kids and your own personal retirement. They compete because one is a longer term. The retirement thing is a longer term, whereas education is a medium term money that parents would need, right? Yeah. So I was struggling with that like crazy in the early years. And then what happens when the portfolio kicks in as far as its growth, and on the back end it grows pretty good, because it's like you know, it's like rolling a snowball, right? It gets to a point where it needs a kicker initially, but then once it's going, guess what? Don't touch it. Let it go. And so, you know, that's how it typically works out.
It seems like the patience is the hardest thing.
Yes. So that's what Warren Buffett says. The market is a mechanism where capital transfers from the impatient to the patient, right?
Okay.
So for example, if you have like heavy activity with all these crazy money managers because they're doing short-term quarterly reporting things, but if your timeline is longer, right, 5 years plus, 2 years plus, whatever that might be, whatever goal that might be, whether it's a down payment for a house, for education, or retirement, whatever the heck it is, you got to remember your timeline is much longer than the professional money manager because they have to report by the quarter. And if they don't do well, guess what? Either they get fired, they get demoted, or, you know, like the numbers are not coming to the benchmark. You don't have to play those games, right? Your portfolio could be not performing well in the short term, but you're willing to take that risk because your money is long term. And if the company turns around, well, guess what? You're not playing the same game as the professional money managers. Therefore, patience is important.
I wish I had it.
Don't mistake me, but somebody quoted
Somebody quoted what?
Accountants go by 4:30 every day.
No, they have a very hard job, by the way.
They do.
The reason why, let me tell you why. Accountant is like, what's happening is they are the last people standing to get the information from operating businesses, to get the data so they can input it in their ledger and get the accounting right, comply with the law. The problem is they're on the back end of the whole process. Those poor people are heavily stressed. Okay.
Yeah.
Let me tell you, I've worked with them because I installed ERP systems and all kinds of stuff, and I know exactly what they're going through, right? So if you are in the chain of process, whether it's engineering, software, accounting, but your process is the last part, the problem is all these people are late. And then when they throw things over to you because you're the last person in the chain, well, guess what? You are stressed out because you got to perform and you got a deadline, right? So I don't know if you have accountants in this call, but you know, it's really hard. I'm not kidding. They have hard deadlines.
Buckle, there is a big company here, big company. Okay, probably Fortune 500. One guy told me one day that their executive, the CEO, around the table, all the engineers and all the other people, they ask an opinion and they express and things explain. And then on his right side is a attorney, and his left side is accountant.
Oh,
he takes the blessing from attorney and accountant, then he takes the decision.
Of course. He has to. Otherwise, the reason is you got to remember we had a lot of financial shenanigans. So the CFO and the CEO now is to sign the financials, that they understand what the hell they're reporting. And if there's some shenanigans, they're going to land in jail. So it makes sense that the CEO is taking the blessing of the attorney and the accountant, right?
Yeah, on his right side and left side. Those are his right hand, left hand.
Right.
Wow.
Yeah.
So here's a joke about accountants. So like there's a company looking for a CFO, right?
Yeah.
And so the CEO and a bunch of senior people wanted to interview like maybe a few people, and they had 3 candidates. So they laid down on the table as part of the interview the 3 financial statements, right? And as the candidate came in, you know, they had their pleasantries and hi and bye and all that kind of stuff. And he said, look, I need you to look at these 3 statements. And I'm going to step out and give you about maybe 30 minutes or 15 minutes. And then you can examine these statements, and we're going to come back and we're going to ask you what is the profitability you want to report given these you know, statements, right? So the first guy gave an answer. Okay. Then the next guy came in. They did the same thing to him, said, look, here are the 3 statements. Can you tell us what is the profitability of this business, how and what you're going to report to the government? Okay. Then the third guy came in. The third guy said he looked at all the stuff and he told this interviewer, look, you don't even have to step out. I'll tell you exactly what it is. So he ran to the blinds, he turned off all the blinds, closed everything. The room was dark. And then he whispered in this guy's ear, what do you want the profit to be?
Oh,
We'll make the profit whatever you want to be, right? So if you have an accountant like that, you better believe they're going to land in jail.
Yes.
oh yeah.
CEO wants to make sure he is not going to go to prison and his books are not under. Okay.
Yes, that's right.
Yeah.
That's right. So how long has this club been around?
I think 4 years.
How many years?
Started 2016.
2016?
So
really?
I think you're going in the 8th year, right?
Yeah.
So the question is, in any 5-year rolling period, has the portfolio doubled?
Oh.
In any rolling 5-year period?
Joanne has a good history.
No, I think just looking at evaluation. We sold something very quickly there a few years ago. I remember we sold something very quick. I'm just looking the iClub. Let me think. The only company we still have was Disney. We bought September 2016.
Oh, okay.
Meta, we bought 2017. Obviously, Disney did not double. Meta has. Meta, we gained 200%.
Disney never doubled?
No, it didn't. Well, at least for now, only like about 4% gain, right?
Right, okay.
Let's see. We bought 17 Meta. These only two companies, the oldest two companies, Disney and Meta.
Wow. Yeah. So over time, and that's what you have to do is you have to go back and say, okay, if we sold something and it took off, what was the reason we sold, and how can we improve our decision process, right? That's the idea.
Mm-hmm.
I mean, it's really hard to hit that 15% goal.
So Buckle, I think you're raising a very good point. It's not that we look for new ones to acquire, but also it is keeping track of the ones that we got out of.
Yes, absolutely.
Is important, right?
Yes, there's no question. Absolutely.
But isn't it also having a great deal of faith in the companies that you do buy?
Not only have to, of course, well, yeah, you're outsourcing your growth in your hard-earned savings.
So you have to have
company, right? It doesn't matter
you have
whether
to have good data to back up your purchase, and then you have to just watch and make sure that the fundamentals keep up.
Yes, absolutely. No
I
question.
think you must have, Buckle, I think you must have very strong conviction for those companies you are holding for long term.
Yeah. Oh yeah, of course. That is precise. Yeah, Jane hit it on the head. What it is that if you do all the homework and you get the confidence in the company's ability to perform, then I take a 10% position. And the reason why, that's where my conviction comes, right? So suppose I take 1 or 2% position, like Reddy says, and the damn thing doubles. It's not going to move the needle in the portfolio.
No, it's not.
Right? Yeah. It's almost like I'm going to kick myself and say, man, I made all this hard work. It doubled, and
I should have. Yeah.
Yeah. Now we're playing shoulda, coulda, woulda game.
I know. And then you also diligently monitor them. That's the key for your success.
Oh, say that again. You also what?
You also diligently monitor them.
You must every quarter. You must monitor, not like how a professional money manager does, but suppose like you just do it on a trailing 12-month basis. So you look at the past 4 quarters, and do your numbers, and you say, okay, yeah, they got a little blip in there. I don't know, pre-tax margin, and so if you can see why and figure out why, if something has went down. And if it makes sense, then that's okay. Or if it goes up dramatically, and of course you got to look at the why. Is it financial engineering? Is it because of operating the business? Stuff like that. If you can answer it by looking at the financials, chances are you'll hold on to the stock.
Exactly. And then that's why you come up with the methodology of 5-4 5321 and
Yeah,
also
so
the
that was interesting how that came out, because you guys know Ron. So Ron, Ron used to have a big beef with me. He used to say, "Bakul, I send all these kind of PowerPoints. You never give me feedback. Are you ignoring me?" So, so you know what I told Ron? I said, "Look, Ron, I'm interested in your opinion. I don't want you to go to all these different websites and different research of outfits and do cut and paste and throw it in a PowerPoint. It looks all jazzy and sexy. It doesn't mean anything to me." So then,
yeah.
so he started pushing me, and he says, Bakul, tell me, what do you do? I said, what I do is in my head, but I have never documented it. So I said, I need you to document it. So by virtue of him pushing me, I actually came up with the 532. And then I gave it to him.
Yeah.
I said, Ron, I don't care which company you do, and it's great that you send all these PowerPoints to people, but let's see if we can do one of these. So then I started have him focus into those, and then that came out to be a good conversation over time. And as long as you have a process, right? There's no process that's perfect. As long as you have a process and follow it and refine it as time goes on, if things don't work, then you'll do just fine, right? I mean, just think about SSG, right? SSG has just few basic stuff. What are they? Pre-tax margin, they have ROE and debt to capital, right? Now, in any of those things, it's a little out of whack or out of like range or something. All that means is do some homework and figure out why. If you can figure out why from financials and the management can explain it, that's it. Your homework's done. You don't do anything. Just move on. Hold the position, move on. That's the idea.
Yeah. Yeah, I totally agree with what you just shared. But then I usually don't go in all one time 100%. I usually just take a 50% position and waiting for it to rise or to decline. When it decline, then I go in again.
Yeah.
So I will accumulate over the time.
Yeah.
To
Well, some
100%.
people, the thing I do is like kind of stupid actually, and I'll tell you why. If I go all in with 10%, I don't have the benefit of time diversification. So what Jane is saying is very important, that you don't have to do like things that I do. What you can do is say, okay, I'll start with like what Reddy says, start with 2% position and then add to it as time goes on, just like Jane is proposing. And that's perfect. And you build it up towards maybe 5, 10 or whatever you feel comfortable with. I think that's even better than what I do.
Yeah. Yeah.
So how often, so Jane, how often do you add to your position?
I evaluate my portfolio and I try to divest those I think doesn't have very bright potential compared to others on my list. So I will rotate. But usually I will let my profit run as Mr. Baku share. I will let my profit run. Usually I don't trim, but for the club benefit, because I know it's important to keep a balanced portfolio. So I recommend to trim Meta. Usually I will let the profit run as long as the fundamentals stand still, remain good. So I think what we have learned from the lesson we have learned from our holdings, the IIPR and the other LGIH, I think if we have monitored very closely and I mean, we all make mistakes, but I think the lesson we learn from our mistakes are we can monitor closely and we have to be brave to divest, convert to cash, waiting for better opportunities. Otherwise, we will, from profitable position to loss position.
Yeah. The other thing is you shouldn't be afraid of holding cash and leaving cash. So if cash builds up, right?
Yeah.
And if things are too pricey, because you got to remember in a club portfolio, you have people, each month they submitting funds, right, as part of their membership. So you might have cash buildup, and so it's okay for cash to build up, but when that opportunity comes, like something that's on your watch list or something, then you have to quickly vote and say, okay, we got to take action to buy this, right? Because you've done all the homework up till then. along the way, and there's no need to like all you have to do is vote, have a second, and get everybody to vote and take action to buy, right? So those kind of logistics, I don't have to deal with those because I'm not in a I'm not in a club. I'm just managing my own portfolio.
But the problem with that I'm finding in the clubs, not just this club, but in clubs in general, is that the stock is on the watch list and
Right.
it's been there for months, sometimes a year. And then
Right.
the time comes and then they say in a 2-hour period of time after you go through all the other business, well, we got to do an SSG on it, and then we got to do this and we got to do that, and then 2 and 3 months pass and you miss the opportunity.
So Anitra, the problem with that is that the delay in that decision is because they didn't keep up with the updates quarterly and keep the SSG updated each quarter and actually each month, right? So if your data is outdated, or if you haven't, if let's say you have a stock watcher on the watch list, but that stock watcher, for some reason or other, could not keep the SSG updated along the way and keep the club, aware of all the things that's going on. And so if you don't do that on a continuous basis, you can't get the confidence to take an active and quick decision to buy, right? Or sell, for that matter, for an existing holding. So, so that's why the delay could cost returns on the portfolio.
So maybe what a person can do, because I don't think a stock watcher, any one person should be responsible for watching everything on the list. So everybody needs to be, maybe, and this is just my thought, assign their stock to watch, and they can keep up with that one stock for that period of time. So when the time comes, they can say, hey, is this what I see? What do you think?
Yeah.
So I think that's a great idea, but I think a better idea will be for the person who proposed the company. Like, for example, I propose First Solar, then I will be the one to watch out.
Jane,
you
don't want to do that. Jane, you don't want to do that. Here's why. Because when you propose something and they buy, you're going to have an emotional attachment to that company.
Yeah,
so
there's a bias there right away.
You want somebody else to keep track of it, even though you're the one who made the initial, motion.
No, I'm not saying the one that in our portfolio. I'm talking about the watch list, because I propose First Solar.
The same thing applies though.
But I have purchased it, right? I propose it because I have strong conviction for it. It's on the watch list, but I already purchased it. So I keep track of it, and it will make sense for me because I'm the one to propose it.
Right. So once in some portfolio, okay. So let's go through this motion. The process. So Jane proposed, somebody proposed. Let's say it's Jane, for sake of example, and then the club votes to buy. Now who's going to be tracking?
Somebody else. It won't be me.
Okay.
I was the one who proposed it on the watch list. So apparently I take a very strong interest in it. So I will keep track of it, or I will have already bought it myself, which I did. Then I will be the one to keep track. If I want to, keep it on the watch list.
Who keeps track of the watch list right now?
Nobody.
Joanne has already set up a pool of
we don't really have people who watch the companies on the list.
Yeah.
Okay.
We have a watch list. We haven't set up a method for reporting on the watch list in the same way that we report on the companies that we own.
So what I used to do is like around mid-90s, I was in a club, and by the time I joined the club realized that I could do SSGs, and I was presenting from day one. So then they realized, oh, okay, this guy doesn't need any hand-holding or stuff, but I needed a lot of hand-holding in the accounting because I couldn't account 1 + 1. They would ask me 1 + 1, and I'll say 11. so
sounds right to me.
It's I got a little assistance from other more veteran club members especially those who would understand accounting.
Mm-hmm.
But they made me an education guy for the first year, even though I was new. And in the second year, they voted me as president. So when I was a president, what I instituted, I said, okay, we've got 10 people. I think we had 11 people, and I said, okay, so, and our portfolio has so many. So I said, we need at least 11 stocks in the watch list, and one should be assigned to each person, right? And that way, what happens is not only you manage your portfolio, but the watch list also is as though you own it, but it's on the watch list, and you can say, okay, the quarter has gone by, this company has reported, and they came in with good numbers, or the price took a hit for whatever reason, and so forth. And so then I would go round robin for watch list, and then we were able to kind of deal with it that way. So it seemed to have worked. And some people fall behind with a watch list or stuff. They have, like, I don't know, they have challenges. They've got young kids, or they're dealing with elder care. So other members pitched in to help, right? Because sometimes you can't, it is a lot of work. Okay, you got to remember, we're doing this in paper and pencil. Nowadays, there shouldn't be any excuse. But back then, we were doing everything with paper and pencil.
True.
So like, I used to always plot things incorrect, and I just, for one plot that was incorrect, it was frustrate me. So I just throw it away and start all over, because it was too frustrating for me. But it stopped my thought process, and I got a little better at it. Well before Toolkit came, and well before all the tools we have nowadays.
Do you suggest that if we have a watch list, I have heard it suggested by others that when you look at your portfolio, you might include the stocks that are on your watch list, say in the PERT report, but there are no actual shares assigned to it. If you just look at it and see how it's doing over time and how it might affect your portfolio.
You can do that, or your other option is you can create a separate portfolio in SSG Plus, and that separate portfolio is just a watch list, right? And you can track it that way. And then when or if a decision comes to buy something from the watch list, then that SSG basically gets recreated in the actual portfolio with real money.
But it's something that has to be kept up. You can't say we need to look at the watch list and then 3 months later it's still not done. Yeah.
That's correct. If it's not done, that means you can't make a decision, right?
Right.
So yeah, you got to keep up to date with it. There's no question about it.
So
let me tell you, I was a stickler. I was a stickler because my background is engineering, right?
Oh.
So I had no. I don't know, it's a blessing or a curse, but the thing is, when I became the president, within the first 3 months, I had some I don't know how to put it. I had some boat anchors, like 3 people never showed up, and this, that, and the other. And I said, guys, why aren't we enforcing the bylaws? The bylaws says that if you miss 2 consecutive meetings, then we send you a letter and say, hey, come on, let us know what's happening. You have a challenge in your life. Are you giving proxies to your other members for voting? And if you do, that means you've attended, or we've had those exceptions. But basically, that very year was very tough for me because I got rid of all the boat anchors. I don't know what else to tell you. I got rid of
what did you say, Buckle? You got rid of what?
I got rid of the people. The people who are not participating, and they were just hanging out there for social.
The people who are keeping the boat where it was and not helping it to move along.
That's correct. So basically, I got rid of like 4 people, and then we recruited like 3 or 4 people who were actually doing real work, and then the thing got better. My only problem is I wanted to get out like 2 years after, and I needed I need a successor, right? So while you're in that position, you want to identify who would be a successor, right? Because you don't want anything to fall apart. And so I found a great successor. She was a retired teacher. Man, I tell you, I thought I was tough, man. So because I think she was a retired principal. So I found my successor, and then by that time my son was like 4 years old, and it was perfect time to leave because I needed to spend more time with family.
Wow, you made me feel better, Buckle. I'm an engineer too. I'm an engineer too.
You're an engineer?
Engineer. Don't say
So,
loud.
Bakul, maybe you could help Boeing out a little bit, huh?
Yeah.
Boeing has some special issues because they were cutting a lot of corners in the early years for their manufacturing, so they're trying to reduce cost. So like it's like they were cutting a lot of quality and that kind of stuff and design issues, and so now it's coming back to bite their behind basically. And we had the Max issue with the tragedy and so forth, and now we have a door blown off or some stupid stuff, right? So the thing is, when you deal with a product, okay, so you have OSHA on one hand in this country, so and product liability, right? And so if you don't build products right or something, and your product liability, well, there's OSHA and various government agencies that can and you have private, actual consumers of the product can sue the company, right? Now, in the case of Boeing, in an aerospace company, we're talking of, safety. We're talking of life and death, right? So now you're talking a different ball game, and these guys basically cut corners on the quality as far as the manufacturing process, and that's not a place to kind of play that game. And now it's coming, it's really coming to a head, right? And so
I
now
read
they're
an
going to have a new
article. Yeah.
CEO. They're getting a new CEO, and
Yeah.
hopefully they
I don't
can
know how
turn it
that's
around.
going to go. Yeah.
So
I read an article maybe 2 or 3 years ago about Boeing, and this was 2 or 3 years ago. I read this article, and the
right,
article detailed how Boeing started out as a company of engineers. Everything
yes,
was about engineering.
right,
Engineers were in every single aspect of the running of the company. At
right,
some point, Boeing decided they wanted to be a moneymaker. So they
yes,
started getting professional managers in instead of engineers.
right.
And this article was detailing that this is how Boeing started sliding down because they didn't have that engineering focus any longer.
Right. Well, the whole point is a company should have a mission statement, and it's not just something on the wall and people. So the mission statement should be living and breathing within every part of the company. So it doesn't matter if it's an engineer, whether it's a businessman, or if it's a janitor. It doesn't matter where you are in the hierarchy. You should be living and breathing the mission statement. If you're not, then the mission statement doesn't mean anything. It's just like a checklist item. So the thing is, what they did was, what Boeing did in the early years, they outsourced a lot of the construction and of some of their critical parts to outsourcing vendors when they had it in-house. They said, rather than having in-house, let's do it cheaper, outsource it, right? Well, I don't think that was a good move. So what happened was, okay, so they got all this thing built. Then what they have to do is when they get these parts from different vendors, with the intent of getting it cheaper, they started realizing the parts don't fit together. So they increased in engineering. They increased the integration cost as part of the manufacturing. So whereas before they thought they were going to reduce cost, they actually increased the cost, and they did not meet the need of reducing costs, right? Thinking they'll be able to do better. Worse, which is more important, which is the safety issue, right? As we saw in the last few years. So now the company is really in a pickle. I mean, I don't know how can they put stupid people in certain places. It doesn't make sense to me, you know. So yeah,
But
it does need a revamp.
Buckle, the CEO left the company recently, right?
I don't know if he left, but it's
going
being
to be
replaced.
leaving. Yeah,
Yeah,
he's going.
He resigned, and I think that's going to solve some major problems, right, with the company.
We don't know yet. We'll have to see how they turn this boat around. You know, this is like a big tank, right? It's not a dinghy. So in order to change things, a tank takes a while to turn. It's not like a dinghy, you can move it around quick. So, to get the quality control stuff back in order, it will take a while, right? The other thing about Boeing was, I think in the last couple of weeks, there was a Wall Street Journal article saying the Boeing CEO and a bunch of guys on the top, they were using company airplanes for personal use. They're not supposed to do that.
That's
you can if they let you. You can if they let you.
You can, but you have to report it. You have to report it properly. That, hey, why do you think that is, Anitra?
Integrity of the management.
Oh, that's correct. But oh, that's a very important part, Jane. But there's another piece to it. So suppose Jane, you were the CEO of Boeing, and you you used the company, took the family to, I don't know, ski in the winter in Colorado somewhere or something, and then you come back, but you don't report it as personal use, right? So the problem with that is the IRS is looking at that very carefully because that's lost revenue. So from your perks, that trip that you made is actually income for you. You see? Even though it's an expense for the company, it's actually your income, and you're not reporting that income to IRS, and therefore IRS is kind of waiting to knock at your door. So
You owe us some more money.
yeah, knock, knock,
that's
knock. You owe us taxes.
For us investors, there is the integrity of the.
Integrity is
Yes,
the most important thing,
absolutely.
right?
If they were dishonest in that, they would be dishonest at other things also.
And that's exactly why if you smell a rat somewhere, either in the accounting or the integrity of management, get the hell out quick. If you own the company, or don't even touch it with a 10-foot pole if you don't own it. Get it out of your mind. Right? That's what it means by not getting married to a stock. Okay.
I agree.
Yeah. Correct. I think, Mr. Baku, I really like your idea of keeping empty portfolio, watch list, empty watch list, and I think our club should do that. It's really interesting because I was kicking myself that we sold FCX, and which I did myself personally, and I sold too fast, too much. I still have a position, but we divest the whole position in FCX. So I'm just wondering that is a very helpful tool for us to evaluate.
Yes. So I mean, economists has a way to say it in a very interesting way. They say it's an opportunity cost, right?
Yeah.
So if you make one decision, that means you've excluded all the other possibilities.
Right.
Okay. And so then you have to, now it's a very horrendous task to kind of keep track of all the other possibilities. But in this case, it's not too bad, because you sell something completely, you exit the position. Now you take that position, put it in a separate portfolio. I call it anti-portfolio, call it what you will, right? And then track that, how that has done relative to the new decision you made. You see, you made two decisions. You made a sell, and now you have to replace it with a buy, right? So you made two decisions. So because of those two decisions, you want to know which one was correct and what was the hypothesis and what's the feedback loop you're getting from the market to kind of say, okay, I was wrong, I was right, or whatever the case may be.
Did you say SEX, or I know you didn't say SEX?
FCX.
Okay. Okay.
The copper company, the gold and copper company. Yeah.
Okay.
FCX.
So did you guys completely liquidate the position, or what happened?
Yeah, we did last month.
Yeah, I think we did.
Well, it's down, and that's still Case Incorporated?
Pardon me?
Still Case Incorporated?
No, Freeport McMoran.
Oh,
yeah.
Freeport McMoran, yeah, that one.
So last month.
The copper, the one with the copper company.
Copper and gold.
Okay.
But I think we make a big profit, but then we could have let the profit run a bit by divesting, a portion of it. But it's okay. I think it's always a great learning experience. And
exactly.
I learned from it. Yeah.
Yeah. I mean, anytime you have great companies or the fundamentals look good, it's going to be hard for you to get the pricing. So you can't be a bargain hunter. You might say, what's a reasonable price to buy, and then hop on the train and see how it does.
Okay. Well, another thing is that some of these companies, like when we do the SSG, it'll say, this is your high. Well, the companies have reached the high and they're going to bypass the high. And I know people say, well, it's going to come around sometime. But from what I understand, I think I heard this on a call, Microsoft went up and it kept going up and it never went back down to that area where people were waiting.
Right. So Anitra, what you're saying is like, if people have a hard and fast rule, I'll never buy anything where the P is above 30, something or some rule like that, if you will. And
Mm-hmm.
if a company like Microsoft always trade like well above 30, but if you have a hard and fast rule, I'll never buy something above 30, then you'll never get into Microsoft, which is
And
kind
that
of
and that would be a mistake.
exactly. So you have to decide like, hey, what's a good PE? See, great companies rarely, okay, trade as a bargain or the kind of SSG stuff we do. So
Yeah.
you have to say, okay, I'm not going to, I might not make a 15%, but can I make a 12% return on a company like that? And if the answer is yes, then you can say, oh, is it throwing a dividend? Oh, yeah, it does throw a dividend. It wasn't throwing a dividend many years ago until a hedge fund manager came in and push them to say, hey, you got too much cash on the balance sheet. What the hell are you guys
That's
doing
right.
over there?
Give some
Right?
of it back.
Get some of it back to the shareholders. What the hell are you sitting on this pile of cash? Right? I want my cash in my pocket, not in yours. Right? So, I mean, so, so
My
basically,
pocket. My
that's right.
pocket.
You see, you are better managing a manager of your cash versus a manager on a balance sheet, right? Because if they have cash sitting on the balance sheet, that means either they're running out of ideas or they're just sitting on it because the company is generating so much cash, they don't know what to do with it. Well, they better start returning it in the form of dividends or buybacks, right? So,
Like Apple.
Apple or whoever. So anyway, if
My
that's what's
course,
happening, then the PE would not come down. It will stay the same. It'll chug along. But then if you have that hard and fast rule, I'll never buy something over 25 or 30, then you'll never hop on the train. That's the problem.
yep.
It's a
Yeah.
tough decision, believe it or not. It's easy to say that, but it's a tough decision.
Yep. My
I
And
course
think
better,
of app.
also there's another thing with BI focuses on growth stocks,
Yes,
and certain size companies should grow at a certain rate. And I
yes.
think sometimes we may get caught up in, if it isn't growing at that rate, we need to get rid of it.
Oh, I see. Okay. Yeah, yeah. That's
And so
correct.
then we may be, and so then as Jane has said, and as Joanna said, we may sell too quickly on some
Yeah,
companies
yeah. So
because
I have
it's
one
not meeting
company
that
that's
growth thing anymore. So it must not be any good. But the BI focuses on growth, and I think we can expand that a little bit.
yes. So, I have a company that I don't expect to grow a lot, but it's generating a big boatload of dividends, but it's all in retirement accounts. So number one, it's not taxable. Number two, I've not reached the age of required minimum distribution.
Lucky you.
So, and number three, I don't need the money. So what do?
Oh,
I keep rolling it into the same
there you
stock,
go.
right? So
There you go.
even though when you retired, it doesn't mean that you don't you that you you're not going to keep investing, right?
Oh,
So
absolutely not.
yeah,
You
if you don't
have
need
to
the
keep.
money, you keep rolling it in, and not the problem is like if your cash piles up over time and you don't deploy it, on a regular basis, then you're going to pile up of cash, right?
Which isn't growing at the same rate.
Which one? Well, if the interest rates are trending up, then it's fine. But I mean, if I came in the country in '79, the prime rate was like, I don't know, 21, 22%. Inflation was crazy. You had the Iran-Iraq war on the tail end and all kinds of crazy. Now, being a young stupid guy,
Wow.
not knowing anything in the world, I just came here, and so I had no clue what
Mm.
the heck was going on. I look back at the history, then I say, oh, okay, this is what was going on. But what was going on in those days was we had not the banks, but we had the thrift organizations, right? So in the thrift account, people were saying, wait a second, why am I getting 5% passbook interest rate when I can move the money into a money market account and get 15% interest, right?
Ooh. Mm-hmm.
Because the
Wow.
prime rate is
Wow.
very high. So in the 70s, people could do that. And so there was no need to go in equities. But why? Because, hey, you were able to get higher returns without money being tied up and without being volatile. So people were moving money out of the thrifts and banks and pushing it into money market funds. The only difference is that the money market funds were not, it's not. There's no FDIC behind the money market fund. Like in a bank account in those days, I think I don't know, the FDI insured till like 100,000, nowadays 250 or whatever the heck it is. But
Mm-hmm.
back then, with money market funds, the net asset value at the end of the day of the entire portfolio is always one. So it's equivalent to a cash, which means even though it's not insured, which means that at any given day it's $1, which means if you need the money, you sell the money market fund, and it really becomes cash. And now you can use the cash and do whatever the heck you want. Now, there was only one mutual fund company in the last 20, 30 years where they broke the dollar. Well, what does that mean? It means that at the end of the day, the net asset value of the money market fund came slightly less, maybe 90 cents on the dollar. What do you think the mutual fund company did?
Right.
What? I
They
have no idea.
actually came up with the money they actually pumped the shortfall of the money into the portfolio so that it's always $1, because if they don't do that, they're gonna have a bank run.
Ah.
Right, everybody's going to start selling this. So wait a second, this is always supposed to be $1. How come it's 90 cents now? So that means a 10% reduction. Oh man, I better get the hell out. They don't want that to happen because then they're going to have a bank run, right? So to prevent a bank run, the mutual fund company said, okay, let's infuse cash into this portfolio so that the net asset value is 1. So that's how they protect investors, because the market could be ruthless, right? People could just sell and just get the hell out quick. And they don't want the companies, investors to do that.
Wow. Buckle, you reminded me. I paid 13.5% for my mortgage in 79.
Oh, okay. Yes,
79.
Yes. Yeah. I can believe that. When we started owning a house in '89, our interest rate was 10.25, and over time I kind of refinance, and got it down to like 6, and then 5 and 7/8 or whatever. And then it got to a point where I said, you know what, I need to stop making payments. It's like a noose around your neck. So I just paid it off when I was 44 years old and call it quits.
And I assumed a mortgage, a VA loan.
Okay.
Assumed a home at 15.5%, but I was selling real estate back then.
Okay.
And
wow.
That's when the interest rate went up to 23%. So when everybody keeps saying, oh, the interest rate's so high, and I'm thinking, what are these people?
Yes, they were very high. No question about it.
Very, very high. Okay, people, I would love to continue talking to you, but I live in New York and it's almost tomorrow.
I know. Well, good morning to you. We're going to say good morning to you.
It's almost Tuesday. I got to go.
All right. Have fun, guys. It was nice chatting with everybody. I know I came in way on the tail end, and somehow you guys stuck with me,
So next time, come in the beginning so we can have this chat.
Well, no, you got to conduct your business, right? Your club business and stuff. So, and then I have a conflict with another meeting. So as soon as I get out of that one, if this thing is still going on, I just kind of hop on the tail end.
Well, we'll still be going on.
Yes.
All right. Good night, everybody.
Okay. Good night, everybody. It was a great meeting.
Okay. See you guys next month.
Thank you.
Bye, everybody.